Good morning, everybody. Welcome back to another episode of the Market Open. It is Friday, September 26th. We are back. We are live. It's Friday. We are ending out the week. There's 2 more trading days of September next week, but pretty much coming to an end right here. And we're green in the pre-markets, and we are green for one reason and one reason only. We were relatively red before this came out 15 minutes ago, but the data is in, and on a Friday where we have a lot of options that are expiring, so you can see a lot of wonky price action today. We got PCE. We got PCE inflation. This is actually the most important type of inflation. This is honestly the inflation that the Fed actually cares about more than CPI and PPI. And it came in not better than expected, but pretty much in line with expectations, which is what matters. Monthly core PCE, 0.2% versus 0.2% expected. That's good. Yearly PCE, 2.7 versus 2.7% expected. And then I think overall PCE came in the price index year over year at 2.9%. 2.9% was expected. These are the full numbers. As you can see, core, yearly, personal income, personal spending, and then the price index month over month across the board for PCE. Not bad. Not bad. I mean, look, honestly, PCE was one of those numbers that I think some people just didn't know what was going to happen. We had a good PPI. We kind of have a good CPI over the past 2 weeks, but it's been a while since we had that data. So I think a lot of people just, they were like, all right, we're just going to see how this ends up playing out, and hopefully the numbers come in line with expectations. And they did, which is what the street wanted to see. It's the arguments. It's the arguments that basically a lot of the Fed presidents who have been a little bit more dovish have been talking about, saying, hey, inflation's not as aggressive as what people think it is. Jay Powell himself, I played a clip yesterday on the Market Open, was saying that the tariffs might be just a one-time impact after a couple of months of pretty much saying that the tariffs would have basically Jay Powell admitted the tariffs are transitory, when over the past 8 months he was, saying the tariffs might not be transitory. And you're kind of seeing that potentially reflected in the overall PCE data. S&P goes green, Robinhood goes green, Palantir goes green, Tesla, Nvidia go green, SoFi's up 1%, Reddit's up 2%, Amazon's 1%. I mean, all these stocks that were down 1 to 2% in the pre-markets, AppLovin, which got a big upgrade today to $800, they're green by about 2%. Pinterest is up, Enphase, Microsoft, Palo Alto, pretty much every name across the board. Intel, which we've got a lot to talk about with Intel, this bad boy is up 4%. It was at $38 in the overnight markets because of some rules that Trump might have start to put out there, which would very, very much help Intel. But even that one's green in the pre-market, and that's likely because of this PCE. So not too bad. Not too bad at all. GDP yesterday came in at 3.8%. We got a lot of data yesterday that was really good in regards to consumer expenditures, in regards to retail sales, and in regards to initial jobless claims, which again just came in lower than expected. And the most important thing about this PCE number right here is that inflation's being tame even with the rate cuts. The biggest argument by the bears from a macro perspective is, hey, if you're cutting rates and we're growing so much, that's going to lead to some level of potential stagflation. If the labor market slows down, growth slows down, and then inflation goes up. And if inflation's staying tame and the labor market's not that bad, and Q3 earnings are going to hopefully be to the upside, which we have some data this morning showing that that might be the case, then that's kind of at least the macro recipe you need to have a bull market. And that's what we seem to be having right now. Let's get a little bit of coverage on PCE, and then we will keep going from there.
Yeah, me in Chicago. And Rick, take it away. Oh, wait, it's 29, not 30. We got an entire...
Literally in the 4/10 instead of up 3/10, exactly the same, at least up to this point until I see revisions, equals last month. So 4/10 back to back. How does that comp? You have to go all the way to April of this year, mid-year basically, and find a higher number, up 0.8. Also on the personal spending side, the income is a little warmer. Not bad. Spending, well, it's a little warmer too by 1/10, up 0.6%, a little better than 0.5%, which is what we were expecting, and with what was in the rearview mirror, and up 0.6 will be the best spending level since March when it was up 0.7. Now, if we account for inflation, make an adjustment, let's call this real spending, it's up 0.3%, still better than expected, equals the rearview mirror. To find a better real spending number, you go into March once again when it was up 0.7. Now,
so again, not bad. Real spending being the best that it's been at since March, along with inflation being tame, plus all the data that we got yesterday. It's just not too bad. Now, did PCE data go up year over year? Yes. Month over month, yes. But it went up with expectations, right? So if the market was expecting 2.3 and we came in at 2.7 month over month, that would be bad. And again, I think that saying that perception is reality. I think that is no more true than in the stock market. Perception is absolutely reality, and the perception of it was, hey, it's going to rise, but it's not going to rise that much. And if it stays within these confines of their expectations, 2.7 to 2.9, things are going to be okay. And based on the data we got this morning, it seems like things are okay, along with the personal spending numbers being the best since March, which goes to show the consumer might not be in the worst situation ever. I mean, anecdotally, obviously, there's situations where we can see the consumer struggling, but in an aggregate data basis for the market to react to what's going on with the consumer, these numbers are relatively positive. And that's what we got going on. So PCE, not bad. And it looks like we are seeing some momentum in the broader markets based on this data, but when the market's actually open, we'll see how they officially react. Shout out to RK right here. RK said, I hit 6 figures today for the first time in my life. I am super happy. Congratulations for hitting those 6 figures. Thank you for being here every day as well. And hopefully this community has helped contribute to the milestones. So awesome stuff. We got a lot of headlines today, folks. We had a bunch of things happen in the past 24 hours from a tariff perspective, bringing up the tariffs again. I don't know what prompted Trump to go on basically a rampage last night on tariffs, but we'll talk about that. Market's not reacting to it as aggressively as you would think they would, which is good. Maybe the market's kind of just like, hey, we don't care that much. But we'll talk about that. Jensen did a brand new podcast, and he talked about a lot of things, and there's some clips from that podcast I think people will appreciate to understand, especially if you're invested in the overall AI ecosystem. And Jensen kind of had some choice of words to say for a lot of people that are believing AI is fake. And then we'll see when the market reacts, can we end out this losing streak to not be a losing streak? For the past 3 days in a row, stocks have been red. The S&P 500 has lost on average about 0.23%. It's not that big of a deal. We have not had a negative 2% day since April 21st. So we really haven't had that major pullback outside of the first 15 minutes of yesterday's market open, where if you had a chance to kind of swoop in and buy AMD at 158 or SoFi at 27 or Grab at $6 or Google at 243, those opportunities presented themselves. The question is, were those opportunities the end all be all of this like pseudo dip, or was that just a precursor to a much larger dip that might be coming in the future? And obviously time will tell, but so far it seems like in the pre-markets, based on this PCE data, markets are resilient and they want to continue going higher, which is not too bad. BMNR, yeah, it was 47, right now 49.95. It did break above 50 when the PCE data came out. The fact that it's holding these levels to me is pretty damn incredible. Ethereum has not had the best week. This one's still below 4,000, but BMNR holding its 1.4x premium when you would think that premium could collapse with Ethereum falling as much as it does, just shows the resiliency of that asset in and of itself. And it looks like hopefully that one can stay at these levels, which is not the worst in the world. So there you go. All right, let's get into it. Good morning. Thank you everybody for being here. Let's do this because we haven't done this in a while. We haven't done this all week. Where are you watching from? Let's put it in the chat. Let's see where we are across the world, and then we'll get into some of these headlines. Senti says, Amit, I hit 6 figures, but I'm worried about losing it because of high valuations and possible pullback. Anyone else feels that way? It feels scary to be invested in the market right now. I think that fear is what you have to go through when you hit milestones. I'm sure a lot of other people have hit 6 figures, multi-6 figures, 7 figures, maybe multi-7 figures for the first time in this community. And the only way you got there was being invested, right? So it's a simple philosophy to me. If you care more about protecting that capital, you sell. And you hold on to that cash and you wait for that opportunity. If you feel in the next 5 years, whatever got you to 6 figures, if it's not something random, but it's like a good quality company, will be around in 5 years. And quite frankly, you would be okay going back to 5 figures to have more money to buy the dip on some of those companies, then you stay invested. I think it's very simple. You either think you believe in the companies that got you here and have a long-term horizon so that 6 figures will be more than 6 figures in 5 years, or you're so scared of how you got here that you just don't want to go back to 5 figures or from 7 figures to 6 figures. Obviously, I'm more biased towards the long-term perspective if you're in the right companies, but everyone has to make their own kind of conclusions on it. All right, where are we across the world? We got people from everywhere. Thank you all for being here. We got Adel from Portland, Texas. We got Marga from Miami, CJ from Pennsylvania, Rolf Klor from Sweden, Lynch from New York, Anna from Icon, Sebastian, Germany, Afram from the Philippines. We got Darius from Lithuania. We got Michelle from H-Town, which I need to visit eventually. Hopefully 2026. I know I failed in 2025 coming to Texas, but hopefully I haven't been to Texas in a minute, dude. It's actually been a while It's been a couple years since I've been there. We got Chris from New York. We got Olivia from Colorado. Peter from Boston. Universal from Memphis. Raphael from Chester. United Kingdom. Engineering Adjacent from Charleston. We got Gervin from Toronto. I love T-Dot. I can't wait to come back to T-Dot. T-Dot was beautiful, dude. I cannot wait to come back to Toronto. Andrew from Ohio. Upstate New York. We got Vancouver. We got, of course, the complimentary North Koreas here. You got to have the North Koreas in the chat that are watching. We got Sabin from Nepal. Jurgen from Miami. Dude, it is so crazy every time we do this. We do this like every 2 or 3 weeks. Like, where is people watching from? It is just crazy to see the amount of people that are watching across the world. It's very, very humbling, but it's so, so cool to see people across the world. Triple V, thank you for the super chat. We got Triple V from Miami with the super chat. Appreciate you, brother. Thank you for being here. And thank you for the super chat. Alim, thank you for becoming a channel member as well. Appreciate you being here. We got Kaio from Brazil, Dexter from Singapore, Sauce from Australia, Tony from Haiti. We got Bulgaria, Manhattan. Goodness gracious, dude. It is quite incredible. It really is cool. All of us come together every single day across the world to either lose money like yesterday or make some money. Like, so, yesterday, I think I was down 79. We ended the day down like 30 or 40. We recovered a little bit of that. I'm sure some people were down more. Some people were down less, but all of us together were losing it. And hopefully today, all of us together are making some money. So I love it. Thank you, everybody, for being here. It means the world. Friday. Let's get into it and let's see what we've got going on. All right. So I think let's start off with the tariffs because that's one of the main headlines we got going on. So Trump went on a tweeting spree yesterday after officially confirming the TikTok deal, which we'll talk about the TikTok deal because I thought that was quite incredible as well in terms of the deal the United States got. But here's what Trump said yesterday. Starting October 1st, 2025, we will be imposing a 100% tariff on any branded or patent pharmaceutical product unless a company is building their pharmaceutical manufacturing plant in America. Is building will be defined as breaking ground and or under construction. There will be therefore no tariff on these pharmaceutical products if construction has started. Thank you for your attention to this matter. So the pharma tariffs that Trump has been talking about for a long time, it seems like they are officially going into place. And we're going to see how the pharma companies, the J&Js, the Mercks, et cetera, are going to be affected by that. But that is one thing that Trump tweeted about yesterday. And then this one came out of nowhere, or maybe I didn't expect this, but we will be imposing a 50% tariff on all kitchen cabinets, bathroom vanities, and associated products starting October 1st, 2025. One of the companies that sells a lot of those products, Restoration Hardware, is down 3%. They were down like 10% yesterday overnight because obviously they will be affected by this. The reason for this is the large-scale flooding of these products into the United States by other countries. It is a very unfair practice, but we must protect our national security and other reasons, our manufacturing process. Thank you for your attention to this matter. So you would think the market would have more of an impact based on like seeing all these tariffs last night. And then the market kind of had an impact, but not really. I mean, it didn't care that much. And I think it's because the market didn't fundamentally believe that we're actually going to have this big of an issue or it's going to be as aggressive, or we just don't know if Trump necessarily is going to go through with it, or is it just a negotiating tactic until they come up with how they want to navigate these tariffs. But you do have particular products that are in the restoration space or in the pharmaceutical space that are getting hit. Let's take a look at some of the pharmaceutical companies. J&J, that's actually up right now, not getting hit too bad. You got Merck, not getting hit too bad. That they're actually up almost 2%. Pfizer, that's flat. Maybe PCE kind of helped those companies as well. But that's what you got with tariffs. Home Depot still flat with that news. Yeah, I forgot Home Depot. That would definitely be a company affected. That one. Yeah, so I don't think the market's thinking it's that serious, or the market's thinking there's going to be a way for a lot of these bigger companies to navigate it. But if this was April and he announced something like this, I mean, Home Depot will be down 15%, right? Like the sentiment around how the perception of tariffs was interpreted across any company that was even remotely intertwined with whatever category Trump was targeting, it would get hit pretty bad. And that's not exactly what we're seeing right now. So as Bert says, maybe the tariffs are just negotiating tactics. Now, speaking of negotiation, another thing that happened yesterday, which was quite incredible, and I just didn't expect it to happen this way, but we got the TikTok deal signed, which was great. That was important. We needed a TikTok deal. But the valuation that the United States got around TikTok, take a look at JD Vance talking about it. It almost doesn't make any sense until you kind of go deeper and see that it might make a lot of sense.
First of all, I would say all credit goes to the Secretary of the Treasury. Couldn't have got it done without Scott. Also couldn't have got it done without Sean Cooksey on my team. So thanks to them. The company will be valued around $14 billion. We actually think this is a good deal for investors, but ultimately the investors are going to make the determination about what they want to invest in. and what they think is a proper value. The most important thing is that it does protect Americans' data security. It ensures TikTok is still accessible. And on this question of the algorithm, which we've heard this a lot, what this deal ensures is that the American entity and the American investors will actually control the algorithm. We don't want this used as a propaganda tool by any foreign government. We want to make sure that our people and our investors actually make these decisions based on what's good for their business, as opposed to what's good for another government's propaganda arm. So that's what we've done with this deal. I think it's very good for the American people. And as the president said, young people love this. We actually want everybody to access this, whether they're MAGA or not. We just want it to be fair. We want it to be fair to everybody. And we think that's what's going to happen with this new arrangement.
Okay, so this is pretty incredible, because if you take a look at the overall valuation of this, it makes no sense. X is worth 44 billion. Instagram's about 71 billion. YouTube's 550 billion. Snapchat's at 14 billion. TikTok in no way, shape, or form is as valuable or less valuable than Snapchat. That makes no sense. It just fundamentally makes no sense. So TikTok at 14 billion right here, to me, is the United States getting a hell of a deal. And the reason it's probably being valued at 14 billion is because the consortium of investors that they've pulled into this deal, Oracle being one of the big ones, which is why Oracle was up yesterday as soon as the executive order was officially signed, along with a bunch of private equity firms, VC firms, Silver Lake, MGX, et cetera, which will own about 45% of TikTok in total, TikTok US. That is a really good valuation to get in. I think all of us would easily say, hey, 14 billion is a steal for a platform that has 150 million users just in the United States. ByteDance in and of itself is worth like 350 billion. So I think Trump got the presidential treatment on this deal. They're going to raise another round of funding likely for TikTok, and that round's probably going to go from 14 to like 100 or something like that. And you're going to see a massive increase for the United States equity stake and for Oracle's equity stake once you get the second round that increases the valuation to be that aggressive. Now, maybe there's some other nuanced details in terms of how they carved out this 14 billion from the overall pie, but I mean, the reason China was so keen to make this deal is because ByteDance, one could argue, loses a lot of value if the US portion of their TikTok business goes away. Why? TikTok is run through ads, and US consumers are the biggest consumers in the world that will actually buy shit off of TikTok. And like, you need people to actually convert from those ads. And across the world, like, the ads are effective. But in the United States, because we love capitalismo, it really does work in an effective way. And on Snapchat, it doesn't, because the demographics are too young. On Facebook and Google, we've seen those money printers when it comes to advertising. And TikTok's AI and their algorithm, which is one of the best algorithms in the world, is really good for advertisers. So from that perspective, it is good that from a national security element, we got away from China and the United States has full control over the algorithm. But 14 billion is just, one could argue, the deal of the century. And we're going to see what this ends up playing out with TikTok. But you do have some momentum there, and the United States officially has control now over TikTok. Webull pre-markets, are we running on Webull? Webull is up about 5%. I'll see if there's any news on that. Maybe there's an upgrade. Webull had their earnings already. No, it looks technical. Doesn't look like, yeah, looks technical. No PR. Oh, no, they got a price target. $19 from Rosenblatt. That was like 10 hours ago, though. So I mean, maybe that's, maybe it was like in the middle of the night, and that's why it's affecting right now. But there you go. $19 from Rosenblatt. That's likely creating some momentum on Webull. Rocket Lab, that stock up about 2.2%. ASTS, that's up 2%. Iran did get a downgrade from JP Morgan. They got a price target increase from 16 to 24, but they got a sell rating. Basically, the JP Morgan analyst was like, hey, everything is priced in for a gigawatt of energy, so it makes no sense to like give it this type of a premium. But nonetheless, Iran right there is green, or is red, based on this price target. It's still up 500% in the past month, so I don't think people can be that upset. Nvidia right there, 178, that's green, and the S&P 659, that's green. All right, let's talk about the other big headline from Trump, and then we'll get to what Jensen said last night. So this is not fully confirmed yet. This is from the Wall Street Journal, but here is what they are reporting. The Trump administration is weighing a plan to reduce the number of semiconductor imports by requiring an equal number of chips to be produced domestically in a 1-to-1 ratio, aka if you make 100,000 chips in Taiwan, you have to make those same 100,000 chips, if you're a company that's importing those chips from Taiwan, into the United States, aka you have to have fabs in the United States that can also produce the same number of chips. Now, that proposed plan would mandate U.S. companies produce an equal number of semiconductors domestically, and firms failing to maintain a 1-to-1 ratio of imported to domestic chips will incur tariffs to incentivize onshore production. This is why Intel was pushing $40 last night and why it's pushing $35 right now. I mean, it seems like the Trump administration had a calculated plan for the past couple of months now to not only pump up Intel with investments from themselves and Nvidia. So you got two, very strong strategic investors, and probably SoftBank was smart enough to recognize this was happening, which is why they put in $2 billion before it even played out. But now they're kind of architecting the tariff law around semiconductors to make sure that the mass production of foundries or of chips inside of those foundries in the United States is incentivized by every single hyperscaler or any company that's importing chips to be able to also make sure that Intel is part of their supply chain to get those chips. Now, I think Nvidia and AMD likely will be excluded from this. I mean, any company that is relevant in the world of semiconductors, Trump has made it a point to exclude them from any of the national policies around tariffs when it comes to semis. So I don't think if Nvidia imports 5 million chips, they're going to have to do 5 million chips in the United States, especially because Nvidia is already agreeing to give up some of their revenue to the United States with a 15% from China. But the point is, this will incentivize and hopefully help more people buy chips from Intel, which it seems like the Trump administration wants to do. And, love it or hate it, it absolutely does feel like them, nationalizing a company to an extent and making sure that everything works in line with that company. You could hate it, you could be the biggest fan of it, but nonetheless, this is what's happening. This is what is happening. And, I thought Nvidia would actually be down on this news because I'd be like, oh, if this does apply to Nvidia and Broadcom and all these guys, they're going to have to buy more chips from Intel or produce more chips in the United States. And, maybe Nvidia has already committed $500 billion over the next 6 years for onshore manufacturing of chips. We're going to see exactly how that plays out, but they announced that back in January of this year. I don't know if this exact law will affect them, but it doesn't seem like the pre-markets are that upset based on that. They're happy for Intel, which is why that's up 5%, but they're not necessarily upset for Intel, AMD, or Broadcom. And those companies are still doing okay. Marvell as well. This thing was dead after earnings. Wow, 82. This thing got to 63 after earnings. Has made a nice little run up back up to 82. Feels a bit more technical. I think they got a couple price target increases, which is helping them. This one down about 1%, but not doing too bad in the pre-markets. Amidst, what's your favorite chips, Lay's or Doritos? I don't know what I like. The chips that I like, the purple Doritos, the really spicy. Some of you guys, if you live in a different country, might not know these ones. You might have your own chip, but yeah, spicy sweet chili. These are my favorite chips. But my actual first favorite chips are the one that Jensen makes because it makes me and a lot of shareholders a lot of money. And speaking of Jensen, there's a lot of talk about AI bubble, a lot of talk about what's going on with Nvidia, what the TAM is. Here's two clips. The first one I want to show is Jensen responding to all the skeptics about saying nobody's making money from AI.
These numbers have everybody talking about a glut or a bubble, right? Zuckerberg said last week on a podcast, he said, listen, I think it's quite possible at some point that we will have an air pocket and Meta may in fact overspend by $10 billion or whatever. But he said it doesn't matter. It's so existential to the future of his business that it's a risk that they have to take. But when you think about that, it sounds a little bit like prisoner's dilemma, right? And walk us again through.
These are very happy prisoners.
Walk us again.
I love this confidence from Jensen. These are very happy prisoners. I mean, you got Jensen being like, bro, we are delivering one of the greatest products of technology history. You want to call it prisoner's dilemma? Sure. But these guys are happy to buy our product because the only reason their stocks are going up the way they're going up is because of us and our chips.
Through, right? Today, our estimate is that we're going to have $100 billion of AI revenue in 2026, excluding Meta and excluding, the GPUs running recommender engines.
Yeah.
Okay. So there's
search or
correct. So there's other stuff.
Yeah.
But let's call it $100 billion.
What is that industry anyways? What is the industry already in hyperscale? What is the hyperscales, between
trillions?
Yeah, exactly. Yeah. By the way, that industry is going to AI. Before anybody starts at zero, you got to start there.
But I think the skeptics would say we need to go from $100 billion of AI revenue in 26 to at least $1 trillion of AI revenue in 2030. Okay. You just were talking a minute ago about 5 trillion when you look at kind of global GDP. if you did a bottoms up, can you see your way to $1 trillion of AI driven revenues from 100 billion over the course of the next 5 years? Are we growing that fast?
Yes. And I would also say we're already there.
Okay. So explain that.
Because the hyperscalers, they went from CPUs to AI.
Okay.
Their entire revenue base is all now AI driven.
Correct.
You can't do TikTok without AI.
Correct.
You can't do YouTube Short without AI. You can't do any of this stuff without AI. The amazing things that Meta's doing for customized content, personalized content, you can't do that without AI. It's all of that stuff used to be humans, doing content a priori, creating 4 choices that are then selected by a recommender engine.
Correct.
And now it's infinite number of choices generated by an AI, right?
But those things are already, like we had the transition from CPUs to GPUs largely for those recommender engines. And now they're going.
No, that's fairly new. I would
in the last 3 or 4 years.
Yeah,
maybe?
Zuck would tell you. I was at SIGGRAPH, and Zuck would tell you, they were late getting to
for
GPUs.
sure.
Yeah,
for sure.
GPUs for Meta is what, couple of years,
Okay.
Year and a half. It's pretty new. Search with GPUs,
For sure.
brand spanking new.
For sure.
Brand spanking new. Search for GPUs on GPUs.
So your argument would be the probability that we're going to have $1 trillion of AI revenues by 2030 is near certain because we're already
Yeah,
there. Okay.
right.
Let's just talk.
So you got Jensen making the argument saying, wait a second, AI revenues are already here. And he points to Meta's advertising and Google's advertising capabilities, search, and their Meta's content recommendation transformer algorithm that has basically led to the surge in increases from a revenue perspective on both of those companies. Now, I know the pushback there will be, okay, there has to be a better AI ROI than just advertising, and that's fair. And I think there are 3 major verticals over the next 5 years that we need to watch out for. Self-driving, inherently AI. Robotics, going to need a lot of AI for that. And then obviously these personal assistants that should be able to take over pretty much every single thing we do on our day-to-day lives powered by AI. Either Gemini is going to win or Siri is going to win or maybe both win or something of that combination. All of that's likely going to need more GPUs, not to mention all the cloud revenue that's handling the AI workload. So from Jensen's perspective, his argument is we have just begun to touch the surface of what AI ROI will look like. And as a result, he also thinks the TAM for Nvidia's AI business is going to be 5 trillion annually.
Where motors replaced labor and physical activity, we now have AI, these AI supercomputers, these AI factories that I talk about. They're going to generate tokens to augment human intelligence, right? And human intelligence represents what, 55, 65% of the world's GDP. Let's call it $50 trillion. And that $50 trillion is going to get augmented by something. And so let's come back to a single person. Suppose I were to hire a $100,000 employee, and I augmented that $100,000 employee with a $10,000 AI.
Yes.
And that $10,000 AI, as a result, made the $100,000 employee twice more productive, 3 times more productive. Would I do it? Heartbeat. I'm doing it across every single person in our company right now, right? Every single
all have co-agents.
That's right. That's right. Every single software engineer, every single chip designer in our company already has AIs working with them. 100% coverage.
Yeah.
As a result, the number of chips we're building is better. The number is growing. The pace at which we're doing it is right. And so we're growing faster as a company. As a result, we're hiring more people. Our productivity is greater. Our top line is greater. Our profitability is greater. What's not to love about that?
Yeah.
Now, apply the Nvidia story to the world's GDP.
Yeah.
And so what's likely to happen is that $50 trillion is augmented by, let's pick a number, $10 trillion. Right. That $10 trillion needs to run on a machine. Now, the reason that AI is different than IT in the past, in a way, software was written a priori, and then it runs on a CPU. And a person would operate it. In the future, of course, AI is generating tokens, but a machine has to generate the tokens and it's thinking. So that software is running all the time. Whereas in the past, the software was written once. Now the software is in fact writing all the time. It's thinking. Yeah. In order for the AI to think, it needs a factory. And so let's say that $10 trillion of token generated, 50% gross margins, and 5 trillion of it needs a factory, needs an AI infrastructure.
Right.
So if you told me that on an annual basis, the CapEx of the world was about $5 trillion, I would say the math seems to make sense.
Yeah.
And that's kind of the future, right?
Yeah.
Going from general purpose computing, accelerated computing, replacing all the hyperscales with AI, and then now augmenting human intelligence for the world's GDP.
And today, it's quite incredible, dude. It's quite incredible. This was a really important podcast, I think, for any Nvidia investor or AI enthusiast to be able to listen to when you see Jensen break down these numbers. And, you know, when he said, hey, AI CapEx spend could be up to 3 to 4 trillion by the end of 2030, one could argue that he's being a bit conservative on those estimates. Now, obviously, we've got to see what the growth looks like for 2026 in CapEx. I think the street's having it at around 35 to 40% of growth from all the hyperscalers and what they spend in 2025. And we kind of have a resemblance of those numbers. Microsoft spent 80 billion this year. They're ready to spend 120 billion next year. If that continues to build out this arms race and there is an ROI, like right now, I think there's two questions. Number one, will the CapEx continue? Number two, is there going to be an ROI? And I'll link the podcast in the chat for those that want to see it. Those are the biggest two questions that are creating a lot of the bears to like have an argument for why it's going to be a bubble. If the CapEx does continue, that's 50% of those concerns that start to fall apart. And you have to take a leap of faith if you're an investor. You have to believe that, yes, that will continue. Either you don't believe and you wait it out and you're in cash, or you do believe and it ends up playing out. So that, at the end of the day, you do have to take that hypothetical risk backed by whatever knowledge you can get to try to make that assumption. And then number two is, if there is an ROI, which Jensen believes there's already an ROI, but if we start seeing real tangible, or like these earnings calls at the end of 2026, early 2027, or hey, this AI revenue, not just like us selling something that creates more AI, but like this thing is leading to this level of productivity efficiency for our business, which is increasing margins by XYZ. If that becomes very evident towards the end of next year, I think the two biggest bear cases for AI probably start to dissipate. Now, the broader question here, and I will acknowledge that this is probably true, and you've had a lot of analysts say this that are deep in the AI space, and I'm pretty sure a lot of you guys agree with this as well, which is eventually there will be a massive AI bubble. Eventually, it will get to the point where so many companies are spending so much money not seeing the ROI. There's exaggerated expectations of what AI will look like, and other companies get bid up for the hell of it. And maybe Nvidia does get to the point where it is just so unbelievably expensive that it doesn't make any sense that that bubble does pop. I think there is a chance that that does happen because it's the nature of markets. It's human psychology. It's really hard to prevent bubbles when it gets that extreme. But based on the numbers that we're looking at, Nvidia is still trading at a forward earnings of 25 times. That is not bubblicious. It's just not. We're not seeing that yet. And maybe eventually that'll happen in the future. But at this moment, that's not necessarily taking place. And if it's not, then we might have some more time. Yeah, as Scott says, we're not close yet. We might just not be close yet to getting there. Now, no one can prevent a bubble. Like if it happens, it happens. But our question is, as investors, do we have a timeline to at least participate in the rally before that bubble forms, if it ever does form? And again, based on the numbers, based on valuations, it seems like we have a little bit of time. One last clip from this podcast. We heard about the Nvidia OpenAI deal for $100 billion. This is Jensen talking a little bit more about Elon and his ambitions around XAI.
You said, this isn't just about better models. We also have to build. We have to have world-class builders. And you said, the most world-class builder maybe that we have in the country is Elon Musk. And we talked about Colossus One and what he was doing there, standing up a couple 100,000, at the time, H100s, H200s in a coherent cluster. Now he's working on Colossus 2, which may be 500,000 GBs, millions of H100 equivalents in a coherent cluster.
I would not be surprised if he gets to a gigawatt before anybody else does.
Right.
In one.
Yeah. So say a little bit about that. The advantage of being, the builder who, isn't just building the software and the models, but understands what it takes to build those clusters.
Well, these AI supercomputers are complicated things. Yeah. The technology is complicated. Procuring it is complicated because of financing issues. Securing the land power and shell powering it is complicated. Building it all, bringing it all up. I mean, this is unquestionably the most complex systems problem humanity has ever endeavored. And so Elon has has a great advantage that in his head, all of these systems are interoperating, and the interdependencies resides in one head,
Yes.
including the financing.
Yes.
And so
He's a big GPT. He's a big supercomputer himself.
he's the ultimate GPU. Yeah, yeah. And so he has a great advantage there.
Yeah.
And he has a great sense of urgency. He has a real desire to build it, and so when will comes together with skill, unbelievable things can happen.
Yes.
Yeah, quite unique.
Something.
All right. So Jensen, very bullish, not only on OpenAI, he was praising OpenAI a lot throughout that podcast, but also very, very, very bullish on Elon and his ability to, I mean, he said Elon might be the first person, like literally Nvidia signed a deal with OpenAI for 10 gigawatts, and Jensen is admitting Elon might be the first person to set up a gigawatt of energy for a data center, which is absolutely incredible. And he obviously believes there's going to be multiple winners in this space. Speaking of Tesla and Elon, Dan Ives raised his price target to $600. We are raising price target on Tesla to 600, reflecting our view that an accelerated AI autonomous path is now on the horizon in 2026, and investors are underestimating the major transformation underway. We believe this will be the biggest growth chapter in Tesla's history. At the same time, yesterday, EU registrations for Tesla vehicles were down 37% year over year. So you've got the car business that in certain parts of the world is just not living up to a lot of the expectations that it had a couple years ago. But then you have the technology analysts like a Dan Ives that says, well, that's not that important. AI autonomy is way more important, and that's what's creating Tesla's multiple. Tesla now, if by the end of today it holds above 400, this is going to be 2 weeks in a row of holding above 400. It's the longest stretch since January of Tesla holding above $400. Remember, I showed you guys that options flow. Someone bought $15 million of the 550, 500 call going into November, not even like 2026, November 2025. So you have some pretty bullish traders that Tesla is going to move to the side that they think it's going to move to, and that might be much higher. Yeah, Tesla right there, 70% up since the Liberation dip, and a lot of these names have been up a lot since the Liberation dip. All right, a couple of other headlines. We got 6 minutes until the global capital equity markets open, and we get to see billions of dollars go back and forth, and hopefully it's a bit more green than yesterday, and we'll see how this plays out. But we do have some pretty good headlines. Gemini, this is a rumor from the information. It's not confirmed yet by Gemini or Meta, but if it is true, this is pretty massive. Meta is in talks with Google, as per the information, to use Gemini for their ad targeting inside of Facebook and Instagram. I mean, I couldn't even believe this headline when it broke after hours because, look, obviously, these hyperscalers are allowed to collaborate with each other, and a lot of them fuel each other's revenues from different elements and perspectives. And Meta works with Microsoft, and Microsoft works with Google, and it makes sense. But Meta has spent so much money on AI; they poached so many researchers, and the fact that they need Gemini's ad capabilities, or I should say AI capabilities, to improve their ad targeting, it almost feels unbelievable. And Google pumped yesterday as soon as this news came out, which is, I mean, incredibly bullish for Google. Google now down at 247. It was at 250 after hours yesterday. Chris brought up a good point. He was on the show yesterday, and he said they're likely using Gemini because of the data that Gemini has on users, and that data mixed with Gemini's AI probably makes Meta's ad targeting better. I think that's a fair point. My only kind of pushback there is Meta even allowed to use like Google's proprietary data on users? Like what is even the intersection of how they're able to kind of get that data in Gemini? And then number two, if it's only being used for the LLM purpose to make their ad targeting better, not the actual data purposes, because one could argue Meta has a lot of data, even if they don't have Google's types of data, and maybe Google doesn't want to sell them that data or license them that data, then that's Meta admitting that whatever they're creating internally around Llama or whatever other AI superintelligence they're going after maybe just isn't ready enough yet to make their ads even better. Now, Meta's ads have been pretty damn good over the past couple of years, led by GPUs. We saw Jensen talking about that. So again, this headline to me was just very confusing on why they need to go to a third party like Google, which is their biggest competitor in advertising, to make their ads better. But if that's the case, I mean, it's super bullish Google. It's also not really bearish Meta. I mean, if this is going to help Meta's revenues, then that's good for Meta. But it just means that Google's AI is not going anywhere. And it looks like that's going to continue gaining momentum. We had that Google employee a couple of weeks ago say Google's going to be the most valuable company on the planet. Here is another reason why. Google Gemini Robotics is officially released, version 1.5. And here's an update on how Google is thinking about the world of humanoid robotics.
Hi, Aloha. Can you use my location and sort the objects into the correct compost, recycling, and trash bins?
To perform the sorting task based on San Francisco waste guidelines, I will use the green bin for compost, the blue bin for recycling, and the black bin for trash.
Here we have on our agentic layers, both control the robot and have access to the internet. To sort the trash, I had to look up the rules and look at the objects on the table, think about where each object should go, matching the rules that I had looked up.
The task is complete.
Good job, thanks.
Hi, Apollo.
Hello there. How can I help you today?
I'm traveling to London with my friend next week. Can you help me pack and put the beanie in my bag?
I can certainly help you pack. I will put the beanie in your bag.
And can you tell me if it's going to rain while I'm there?
It will likely rain on several days next week in London, particularly on Wednesday, Friday night, Saturday, and Sunday. I will put the umbrella into your bag.
Thanks, Apollo.
You're welcome.
Okay, so not the most exciting, obviously, with a robot putting an umbrella into a bag. But the point is, Google is spending a lot of money to make sure that eventually this robot can do way more than I actually haven't watched that video, so I'm seeing it for the first time. I just saw the update. But the point is they're working on it. And because they're working on it and they feel so strongly about their investment in Apptronic, which is the Apollo robot, Figure, Optimus, Apptronic for Google's Apollo, like all of these eventually are hopefully going to be massive winners. And if they are winners, that's a whole nother level of AI that we have not even seen yet in terms of how the hyperscale is going to be training for that. So I think every Google investor, every investor in general should be optimistic that if this vertical plays out, if humanoid robots does become a thing, which the jury's out on that, but if it does and everyone has a robot in their house, I mean, we're talking about hundreds of billions of dollars of revenue for a lot of these companies and potentially a lot more productivity gains. And we're just going to have to see how that ends up playing out. All right, folks, here we go. We got about 10 seconds left. Let's get into it. Thank you, everybody, for being here. It is Friday, September 26th, 9:30 a.m., and the stock market is now open. All right, wake your ass up. Let's get into it. Robinhood, 123.63. That is green. 123.52. That's up about 1% on the day. Again, PCE came in better or came in line with expectations. 2.7 versus 2.7, 2.9 versus 2.9 on yearly. That is likely what's helping all stocks in the pre-market as we get into the market open, where we're going to see if those PCE results are enough to keep stocks elevated. Nvidia, that's down about 0.34%. Palantir, that's down 0.41%. Tesla, that's up 0.79. That is green. SoFi's green. Google's green. Grab is down 618, 1.2. AMD is up 0.4%, or actually down 0.4%. Reddit's down 0.32. Amazon's up a little bit. When I mean a little bit, I mean 9 cents. So very, very light movement on some of the hyperscalers. And then PayPal is also up about 0.06%. All right, so a lot of these stocks are losing their pre-market gains of 1% to 2%, but they're not necessarily going red. They're just going flat. AppLovin basically going flat, 648 from 655. Circle, that's up 0.27. Pinterest is up 0.78. Intel, 3%. Intel losing its pre-market momentum. It's still up 2%, but it was up 5%. That one is going down. BMNR, is that one selling off? 49.51. Again, it was at 50, so down 50 cents is what it is, but you can see a lot of these names getting a bit of pain. Duolingo, that's down 0.3. TFC, that's at 45.96. That's up 0.48%. Pfizer, that's up 0.51. Baba, that's down 2.3, which is okay because Baba's up like 20% this week, along with a lot of the other Chinese names. Boeing, that's up 3.7. So you got a little bit of green on Boeing, but still getting some more pain. How about SMH, the entire semiconductor ETF? That is also flat based on those the new rules that Trump put out around domestic production. Pounds right there down 0.29, S&P 0.26. The Qs likely red or flat. The Qs are flat at 0.21. MicroStrategy, that one went below 300 yesterday. It's at 301. I mean, MicroStrategy is up 2% year to date. I mean, it is vastly underperforming a lot of names. And so it's got a couple months left to see if this turns around, but that one is flat. How about Tesla? Are we moving on Tesla? 432. 432. Tesla's green. Costco had a good earnings. They beat on the top and the bottom by about 2 to 3 percentage points. Costco's red. All right. First time we've seen, not the first time, but I think it's been a while since we've seen a negative 4% day on Costco. Costco usually doesn't move like that. So I guess something in the earnings the street didn't necessarily love. Maybe the announcements of the restoration tariffs that Trump put out yesterday around cabinets and all those other things. Costco does sell a bunch of that stuff. I don't know if it's like anywhere near a significant portion of their revenues, but that could affect them theoretically. And so maybe Costco is getting a little hit based on the Trump kitchen cabinet tariffs that he put out yesterday. Google right there, 248. That's up 1%. Iran is down because they got a downgrade. I'll read the downgrade in a second. But again, I mean, like, I just don't think anyone can be too upset about Iran, given it's had a massive run. If you're buying a stock that's up 5x in a month, you've got to buy it with the expectation, knowing it's probably going to come down. It's like the laws of physics most likely lead to it falling versus going up. But that also means you get a better chance to DCA. And if you bought it at 49, you probably got to love it at 42. Nubank right there, 1598. DoorDash, 263. And then Delta, 5710. Tesla, one of the only ones that's holding up. Tesla and Hoodie back to 124. Tesla at 223. JP Morgan said Iran builds, owns, and operates data centers and electrical infrastructure, primarily owned by renewable energy. The company recently launched cloud services business. We are moving to underweight from neutral. We estimate shares are pricing in a 1 gigawatt deal, which would be a deal for record scale and capex of 10 billion, which is possible over time, but for now creates more downside risk in shares than upside potential. I think it's a fair argument. I don't know if 24 is necessarily the best price target, but their argument is like, hey, the stock's been priced for a lot of movement. That movement has already happened. We have to actually see the execution of these gigawatt data centers being built out. And so we'd rather just hold for the moment, which I don't think is crazy, but that's likely why that stock is getting hit. HIMS right there, 55.77. That's down about 1.5%, or actually up about 1.5%. SLNH, this is another tiny data center play. That one's down about 3.4. It is up a lot for the week. What about Quantum? Dude, Quantum, it is back in the news. And the number one thing people are claiming, at least for the IONQ guy, is that this is a massive fraud. And it's like, yeah, I don't know. And the stocks definitely don't reflect that given their momentum. But you got a lot of people, not saying that all of Quantum is a fraud, but IONQ in particular, D-Wave right there up 27.07. You know, they're claiming that it's just not real and that it might not be as attractive as what the CEO says, which is, you know, replacing Nvidia by 2027. Rigetti right there, 33.03. That's up 2.9%. So Quantum not really getting hit today. They did take a beating yesterday of about 7 to 8%. But again, a lot of those stocks are up a lot. I mean, same thing with Iran. The Quantum names are up like a lot over the past month. Not as much as Iran, but a decent amount. So giving a little bit back is not that crazy. Nebius, S&P goes to 660. We go green. Nebius, 108. Hit 109. We were at 114 yesterday. That one's back down. And that is red. Amplify, this stock is up 11% right here. Again, another small market cap energy company. I think we've pointed out like 5 different under $1 billion companies that are in the energy space that are all up minimum 10% this week, which is quite incredible. Amplify engages in the acquisition, development, exploration, and production of oil and natural gas properties. All of these names, I doubt there's any major headlines, just the natural demand for energy. I mean, you heard what Jensen said. If we're going to have $5 trillion of capex annually, you're going to need something to power that, which is also the bull case for Iran, even if, you know, JP Morgan thinks the shares have run up too much. Iran right there down about 9%. All of that ends up being a major argument for the energy data center plays, which is why a lot of them are getting green. Tesla right there, 434. Let's do a poll right here in the chat on do we end up green or red for the day. So far, we're green. We have shades of red. So let's see what we think for today. Green or red today. What do we think? NUAI, that one's running. I don't know this one. New Era Energy and Digital, 22%. Wow. Another energy company, market cap of 50 million. Exploration and production company, which engages in selling oil and natural gas products, headquartered in Texas. Look, a lot of this stuff is going to be very risky, right? If you just jump into a small cap that's in the energy space and expect it to run based on the whole sector being bullish energy. But I mean, if you're able to time it right, which is not easy, but if you're able to do it, then obviously it can do well. One thing real quick, I know a lot of people have been asking about the Fermi IPO. I have not gone through the S1, but these are 4 highlights from the S1 that kind of feel a little scary to bet on. So number 1, there's no revenue, $13 billion valuation. Their goal is to power AI by 2038, and the nuclear component will be called the Donald J. Trump Generating Plant. I am not kidding. The nuclear component of this energy company, ticker symbol FRMI, that is IPOing on October 1st, they are calling the nuclear component of their plant the Donald J. Trump Generating Plant. I'm going to go through the S1, but when I saw these 4 things, no revenue, 13 billion valuation, 10-year timeline, and naming the plant the Donald J. Trump operating plant, probably means it's a buy. I'm not like, it's probably going to go to the moon, but in all seriousness, I don't know, dude. I don't know if this is an IPO that's serious or that's worth getting into. It really feels like exit liquidity. That's what it feels like. And the only thing I can say for retail is you never want to be exit liquidity for names like this, and this might be it. But yeah, I mean, maybe the IPO does very well because it's in the energy space and it goes up 3x in a day. But yeah, it's a little next level glaze. That is correct. A little next level glaze. Amid, if they name it for DJT, will that make David Sachs and Chamath suddenly like nuclear? Maybe that's what happens. But yeah, I'm going to avoid this IPO and I'll be on the sidelines. And, we're getting to the point of the year where I think we just want to protect our gains. We don't want to take unnecessary risk. Whenever you feel the FOMO, just remember, if you are doing, even 30% this year, S&P's at 15%. If you're even beating the S&P by 15%, I know most of you guys are beating the S&P by way more than that. You just want to protect the game. You want to have a good year. You don't want to have anything mess up the last 4 months. And so I think it's more preservation. And that doesn't mean your favorite companies can't buy the dip on, buy into a little bit of strength if you love these names, but new names that you would know nothing about that might be a hit or miss, it would just suck, right? To lose some of that money towards the end of the year. AMD right there, 161.85. That's up 0.4. S&P making a move, up almost 0.5%. I don't think we get any data outside of PCE today at 10 a.m. Oh, no, we get Michigan consumer sentiment. All right, so that likely will have some effect potentially on the market. Street wants 55.4 on consumer sentiment. We will see what happens in about 20 minutes when that comes out. UNH, that's green on the day. Lemonade, that is slightly red. That's down about 3.6%. Oscar, that's green a little bit. ASTS, that is up a little bit. Hoodie, 125. Okay, we touched it for a second. We did get to 130 this week. It's been kind of stuck in this range, but I like that it's normalizing in the 120s. By the way, the Robinhood credit card app is now number 20 in the App Store in the United States for finance. So it seems like, the only way you get to that level is if, thousands and thousands of people a day download the app, which means they're probably putting out the credit card to a lot of people. And so it looks like that is going to be accelerating for them. And that should hopefully be a tailwind going into Q4. Grabby grab right there, 615. That's down about 2%. Bitcoin actually going green, 109.6. $300 million were liquidated in the crypto markets yesterday. Bitcoin, Ethereum, all of the crypto market cap is now underneath 4 trillion again for the first time in about a month. 3.74 trillion is the full market cap of crypto. So you are seeing a bit of a correction across the crypto ecosystem, which is okay. Coinbase right there, 306. That is slightly green. And then MicroStrategy, 301. That one is slightly green. Amazon is up a little bit. Again, we are new shareholders of Amazon. If this thing goes down back to the 210s, I probably will buy again. 220 right here. We got it at 222. That's up 1%. Greg said, I just got the gold card. Yeah, I think a lot of you guys are going to hopefully start to get it. It really is one of the best cards in the world, dude. 3% on it's like saving 3% on literally everything. It's quite incredible. Like, you can't pay your rent with it, but like you can pay off a lot of stuff and get that 3%, which adds up over time. It really does. Bitmine right here, 49.70, trying to get back to 50. That's green. Tom Lee was on CNBC yesterday, all the way from South Korea. And I think we played that clip. You guys saw him basically say, hey, yes, there are pockets of the market that are frothy, but the overall sector of AI is a massive tailwind that's not going away. And I think he tweeted again yesterday, the conversations he's having with his institutional clients in South Korea are basically doubting this entire market. And once again, continuing to prove that, like, to his point, that a lot of people are quick to ring the bell of a top, and this lack of conviction shows the pain trade is probably higher. And he is absolutely right on this. The amount of times on this show we've highlighted an argument from someone saying it's the top, it's toppy, it's going to all crash, yada, yada. Like, it's very hard for people to call the top. So when multiple people are trying to call it at the same time and using the same argument to call it, there's a good chance that's not going to be the top. There's a good chance that's just not easy for the market to top out like that if everyone thinks it is the top, which I think means there's some more momentum for the bulls. S&P right there up and out 0.5%, 661. That's still green. No news on Grab. I think the only thing was a analyst hold. What was it? I think it was it wasn't JP Morgan. It was Morgan Stanley. Morgan Stanley issued a hold on Grab. They all have price targets in like that 630 to 640 range. A lot of them outside of Mark Mahaney are scared to give it like an $8, $10 range. So I think until Grab breaks through the 660s, which it almost got to on Tuesday, a lot of these analysts are probably going to keep their price targets kind of tame. Or if Grab just has a monster Q3, that could get them to raise it in the $7 to $8 range. But maybe that hold from Morgan Stanley is why Grab is down about 1.6%. Pound right there, down about 0.28. Tesla up 1.68. Next Decade, how's that one doing? That's up 4%. Not bad. If you bought the dip on that over the past couple of weeks, not doing too bad. How about Oklo, the energy names? Oklo is down 5. SMR is down 1. Nano Nuclear is down 3. Okay. So you are seeing some of those names get a little bit of a hit. Google right there still up about 0.71% on the day. This was a piece of macro data I wanted to show before the market opened, but let me pull it up right here. People are taking profits. So retail and hedge fund investors last week, as per Goldman Sachs data or Bank of America data, sold $4 billion in stocks. Institutional investors sold $1.4 billion. A 4-week average is now $1.6 billion of profits. Hedge funds sold $2.9 billion. Retail sold about $300 million, posting their third consecutive weekly outflow after a negative $800 million in the preceding week. So you do have institutional, hedge funds, and retail taking about $4 billion of profits, about $1.5 billion over the past couple of weeks average from the market, which I think is very fair. I mean, you don't have to take profits, but if you're up massively on a name as you get towards the end of the year, locking in those profits is not a horrible thing. And Uncle Sam deeply appreciates that because he's going to take a little piece of it as well. But you do have retail that's taking some profits, and I think that's okay in the midst of some of this momentum. Robinhood right there, 123.39. That's up 0.5% on the day. When does the rebalancing end? On September 30th. So we got about 4 days left until that rebalancing officially ends. Bank of America does say there's going to be about $45 billion worth of stocks that are sold off on the rebalancing before Q3 ends. Applied Digital right here down about 4%. Where's CoreWeave? So we do have another 5 days left. CoreWeave down about 1.7. Down about 1.7. Intel still 34.70, not really breaking out. It was at 38 overnight, back to 34.55. Not moving too hard above those levels. SoFi taking a breathing before earnings. I think so. I think SoFi ends out the year above 30, like minimum. I think it's hard to imagine this one gets stuck below. And one of the reasons that I think the market's been a little wobbly the past couple of days is because there has been some chatter that the Fed is not going to cut in December. They're going to cut in October, but not December. And I think some people are freaking out about that. I don't see that happening. I think we're going to get 2 more cuts. I think everything Jay Powell said over the past couple of weeks kind of identifies that we will get 2 more cuts. And so if we get those cuts, I think that's big for SoFi. And we've already seen refinancing demand go through the roof. We played that clip yesterday. It's even, outpacing mortgage demand for new houses because people are ready to refi, even with rates down about 0.25%. Tesla right here losing all of its steam. It was at 435, back to 425, completely getting hit from there. How about the VIX? Is the VIX up? The VIX is down. VIX is still down below 20, has been down below 20 for a while, down about 1.4. It's also options expiring day for Friday. Put in the chat if you have some options expiring. If you have covered calls, if you bought any calls, you have some sold puts. Got a lot of options expiring today, so that could lead towards the end of the day. some different behavior from these algos in the broader market. Evercore raises Apple to 290. Wow, that's a street high. Keeping an outperform rating. A survey of 4,000 U.S. consumers points to stronger than expected iPhone 17 refresh cycle. All right, Evercore saying Apple to 300. I wouldn't mind that, as it is part of my stock draft. And I would like to see. By the way, look at the heat map today. Pretty green across the board, bro. Apple and Costco, the only ones that are down. It's a green day. Financials, healthcare, industrials, entertainment, farm, which, by the way, Trump said he's going to take some of the tariff revenue and give it to the farmers yesterday. So maybe that's why the farm stocks are up. Technology, obviously, software, consumer defensive. It's not that bad. Costco is one of the only red names. I mean, some of the software names are red, but the technology names are green. I have BM&R 60 calls expiring. I have SoFi calls expiring. Oh, yeah, Steve has those SoFi $30 calls. So we'll see if those get challenged towards the end of the day. I have some Iren covered calls, Palantir weeklies. Dude, Palantir premiums are still incredible, even though the price action has not necessarily been, crazy to the moon. It's been kind of settling in around, I would say, 160 to 180. I still haven't heard an update from Citron, bro. It's been a month that they initiated the short. Usually, they put out an update at least every month about how the short is doing or what they think about the short, and they've said nothing. So maybe that one doesn't end up playing out. But you are getting some green across the board. Hood calls expiring today. I need Amazon to hit 230. That's the hard part with buying calls, right? You have to have the stock go in one direction, or else you lose a lot of money, versus the opposite with selling. Now, granted, if the stock goes way above your sold call or put, then it's a little different. PayPal right there, 66.93, and then Salesforce 242. AMD slightly down, 160.8, and then Tesla is up 1%. Chad says, did you see the IRS contract? I did. Let me pull it up right here. I did tweet about it. So this is, shout out to GoCarp. Again, he is our guy who finds a lot of this stuff. Palantir has won a $100 million sole source opportunity from the IRS. And I'll link this in the chat for those that want to see it. What's exciting about this, again, is those two words, sole source. Sole source bidding, as you can see right there, the IRS saying this initiative is the development of a semantic ontology framework that enables interoperability and meaningful analysis, all of that going through the proposal for what Palantir can do for the IRS. Now, Palantir has worked with the IRS for a long time, but this looks like a $100 million new contract for Palantir. That sole source means that there's not that many other companies that could bid on this because they just did not have the ability to bid, right? Or the technology or framework to even compete with the bid. No competition. No competition. So, I mean, we've seen a string of Palantir deals over the past couple of weeks. Not only all the major extensions we got at AIPCon, which were pretty strong in terms of the number of years on those extensions, but then the UK deal, which kind of, honestly, the only part about the UK deal that sucked is that it was announced at the moment that Jay Powell was talking. If they had just waited like 3 hours, or they had just waited a day, it would have been a much bigger deal. But they announced it the day, the federal government or the Federal Reserve was lowering rates for the first time in 9 months. And so like people kind of just didn't care that much about it. But that was a massive deal, $1 billion internationally in the UK, first $1 billion deal. And then you have IRS, another $100 million sole source contract, which is one of like 5 different sole source contracts over the past couple of months. I mean, it's why Palantir is holding its momentum and holding its multiple as well. 177.68 down about 1% of the day. We almost hit 185 on Tuesday, which just goes to show people are still ready to continue betting and trading the name when it comes to Palantir. S&P 500 right there, 661.20, and then Nvidia slightly down on the day. Doug says this is what you call a moat when no other company can even bid in the work because they can't do it. Yeah, dude. And having a moat is like, it's very special, dude. If for those that have been invested in a company in its early stages and you've seen their ability to outperform other names because of their moat, it's special because it's really hard to get a moat. And sometimes there's maybe too much of an overemphasis on moat in the broader markets. And, Warren Buffett is kind of the person that really introduced the concept of moats. But I mean, anecdotally, Palantir at $7 had a moat. No other company could compete. That is why their stock has grown. Robinhood, which took a lot of arguing back in the early days of, hey, their UI, their user experience is a moat. And you've got to be crazy to think that a product that keeps you hooked and coming back every day, multiple times a day is not like the fact that people are saying, oh, that can't be a moat. It's like, no, you're crazy. That was a moat. And we've seen how the product has evolved and how the stock has evolved because of that moat. So having a moat's hard. Nvidia, obviously, no one can replicate their GPUs. Having that moat and having it being set in stone really is one of the key elements to, being able to compete in the public markets. S&P 500 right there, 661.26. Reddit, 1.5%. Grab right there, down about 2%. Then the Googs at 247 right now. Chad says, I am on a moat. Dude, Chad is eventually going to be on a boat, aka a yacht. He's probably watching this from his yacht right now. He's probably watching from his yacht. Is Trump talking right now? Do we have Truth Social? Trump was tweeting a bunch of stuff about JPAL last night as well. Okay, Trump says James Comey is a horrible person. Make America great again. Dude, I've not even kept up with that trial. Like, I tried to pay attention to it last night, and I was like, dude, I don't care about politics. This is like just too. But yeah, for those keeping up with the James Comey stuff, Trump is not a fan. Not a fan. All right, so we got consumer data at 10 a.m. We'll see what we've got going from there in regards to sentiment. That's in about 7 minutes. Oracle, how's that doing? That one's kind of flat for the week. Oracle 290. Again, I just don't think investors can be surprised by this. It went from 230 to 350. Like, what did you expect was going to happen? Like, there was no revenue. There was a promise of revenue in the field. Like, it's and a lot. I don't think I was retail that bid up Oracle. I think I was a lot of institutional guys that was like, holy crap, we got to get into it. And now they're down 25%. And like went from 230 to 350. You thought buying at 330 was the deal of a lifetime. It's like, no, dude, like, you missed it. You got to wait for a better entry. So 291 on that. I think that's still an amazing price action for Oracle, but the TikTok deal is not just going to get them back to 350. They've got to actually deliver on that revenue. Oracle is up 75% year to date. If you bought at the April lows around 120, you're up more than 100%. But this one's still doing pretty good. ETH is pumping. Chad said he's watching from the middle of the woods. That's of course, Chad is in the middle of the woods. ETH right here, 39.80. All right, you got a little bit of a green candle. I wouldn't say that's necessarily pumping. It's up from 38.50, which is up 100 points, which is nice. But getting back above 4,000 would be nice to see. Does that mean BM&R is moving a little bit? BM&R, nope, that one's flat, 49.29. But not moving too crazy right here. Bitcoin still at 109. Fed President Barkin says the economy is still growing, but not as fast in 2022 and 2023. Dude, we just put up 3.8% GDP. I mean, if we continue that for the next couple quarters, we're going to average almost 4% growth. That is way better than 22 and 23. We've got to keep up that growth. But if we do, that would not be the worst thing in the world. Overall, guys, we're getting some flatness in the market. I mean, it is a Friday, so you can't expect too much crazy action maybe towards the end of the day. But S&P is green, Palantir and Hood down a little bit, Tesla's up a little bit, Hims is up 3%, Uber's up a little bit, CoreWeave down 1%, Rocket Lab up a little bit, Archer's up 3%, Verizon's flat, Dell is flat, and then Intel's up a little bit. Qubit, that's pumping, QUBT, another quantum name, that's up 10%. Don't know why, but that's green. IONQ, that's flat. Some of the other quantum names are relatively flat, and then the Qs are also flat. Amit, what do you think about BM&R 70 calls? I wouldn't buy them if you were to sell them for like next week. I think that's totally okay. 70 is pretty far out of the money. I'm not keen on buying short-term calls in this environment because you just don't know. I mean, we're up, like, if we had a 5% pullback in October, as much as it would suck, I don't think anyone in their right mind could be like, oh, it caught us off guard. It's like, no, we had 3 months, not 3 months. It's almost been like 5 months since April of pure growth in green. Like, yeah, if we get a pullback before a Santa Claus rally, that's fair. You just can't be too upset. And then calls get demolished at that point, right? So any short-term options, especially if they're not leaps, are going to get hit. Now, if you say BM&R like 2027, $70, I think that's fair. I think that's crazy. But short-term's a bit aggressive. Amazon reaching for 221. trying to get up there. This is the pullback before the October summer rip, like September. That is fair. And yeah, one could argue this pullback also is purely technical. S&P trying to make a new high of the day, 661.50. We'll have consumer data in 3 minutes, and we'll see what happens. But you do have a little bit of red right there. And then ETH still trying to break above BMNR 49.43. 2027 is the bear market for ETH. Dude, I am in the ballpark, which, and maybe I'm wrong, but I do think some of you guys agree with this. I don't know if we have to have a bear market for crypto, or the crypto winter, as people say. And I'm not even talking about it from a macro perspective, which there's tons of arguments for, like just like legislation, macroeconomy, AI sentiment, rate cuts. Forget all those arguments. I'm looking at stable coin usage, which hit $250 billion in supply, 180 of that 250 billion being on Ethereum. I'm just looking at the level of utility that's starting to be imposed on these blockchains, like Ethereum in particular. Ethereum and Solana are the two of the main ones. And it's ramping up. 294 billion, all-time high stablecoin market cap. And because that's ramping up, if that doesn't slow down, and PayPal, Walmart, Goldman Sachs, Visa, MasterCard, all these companies have no intention of slowing that down because it's actually value accretive for their business, then I think the underlying assets should benefit from that, especially in a cutting cycle. But I don't know. I don't know if we think we have to see that rates necessarily go counter what crypto should do, which historically they kind of go in the same direction. I think enough things have changed in the crypto space to negate a crypto winter. Yeah. Like, I think so. Maybe I could be dead wrong on this, but it's just like you have way too many institutional investors and like money that, quite frankly, controls the planet. You know, we're talking about big money here that are invested in these assets. Like, it's hard for them to just like let their money dissipate because of this 4-year cycle that's supposed to happen every time. It's like, no, dude, BlackRock makes a lot of money off crypto. They're not going to easily just let it go to shit if they can do something about it. But we're going to see. I mean, over the next coming months, we'll see exactly kind of how it plays out. But Ty says, I've been in crypto since 2013. The reliable patterns of the old 4-year cycle is dead, in my opinion. Institutions are too involved now. Yeah, I kind of think so as well. And again, I've not been in crypto that long, but just like logically, it feels like there's a lot more forces that matter. I mean, remember the last time Bitcoin got to 69K in 2021, that was all retail. That was Robinhood and Coinbase #1 on the App Store for like 5 months. Everyone downloading that. Like, there was no, there was barely any MicroStrategy. There was no BlackRock, right? It's kind of a different world right here. Reddit at 234, Amazon at 220. All right, we should be getting consumer Michigan sentiment. Remember, these guys survey like 300 people, so it's not really that indicative of the entire United States, but it is something the market pays attention to. And we should be getting these results very soon. We'll see what the market thinks. AppLovin got upgraded to 800 today. AppLovin's doing very well. I mean, that stock has been pretty incredible. 661 up 3%. I still don't know what these guys do outside of advertising technology. Remember I told you guys I want to start that Substack deep dive? I'm going to link my Substack in a bit. I already made the Substack. I really do want to commit to 2 companies a month. 2 companies a month. And the reason I really want to commit to it is because I think it's going to force me to get better at analyzing companies. And if I dedicate 2 weeks to one company and like just go all in on understanding it, and then put it out there, and see what people think, I think it will just make me a better investor. So it's definitely one thing that I want to commit to. And AppLovin's on that list. AppLovin is on that list to understand. All right, do we have the data? Do we have it? Okay, let me see. 55.1 versus 55.4. That is a pretty good read. That's basically in line. Street wanted 55.4. We're at 55.1. 5-year inflation expectation, 3.7 versus 3.9. That's a beat. That's good. Consumer expectations final, 51.7 versus 51.8. That's good. Current conditions, 60.4 versus 60.1. That's fine. Overall inflation expectations, 4.7 versus 4.8. Right now, headline CPI is at 2.7. So whoever Michigan University is surveying still think inflation will be double the current rate, which I don't know if we easily get to 5% inflation. But those are all pretty much in line with expectations. That should be helping the market. Yeah, there you go. S&P, high of day, 662. Well, that's not too bad. That is not too bad. You're getting some momentum there. 200 people poll moving the market. Dude, it is kind of crazy that the market cares this much about this data. But they do. They really do. VG is above 15, not too bad. GameStop's getting some love as well. S&P 661.95. Wow, GameStop 5%. I'll see if there's any news there. But GameStop's getting some love. Duolingo, is that green on the day? Duolingo is flat, but you do have 311, which is not too bad. And then VG again above 15. Yeah, that was one of the most tame consumer sentiment reads we've seen in a while. VG was stuck at like 12 for the past couple of weeks. Now that's one back up to 15. And it looks like that's not too bad. AppLovin all-time highs. AppLovin all-time. Again, it's hard for me to buy AppLovin here. I would love to do a deep dive and understand it, but like, dude, this stock has been incredible. It's one of those names that people that haven't been in Hood and Palantir and see their multiples are like, they don't understand it. I'm like that with AppLovin. I don't understand how it trades, where it trades at. I do know they're growing at 77%, which is, pretty incredible. But this is why some of these stocks require a real deep dive to understand how they play out. All right, let's get a little bit more coverage on this consumer sentiment data. But so far, it seems pretty positive.
Indeed, these are final reads for September on University of Michigan sentiment and inflation numbers and expectations for some improvement. The reality is each one deteriorated on growth. 55.1 from 55.4 is the headline number. It's still the weakest going back to May. If we look at the current conditions, 60.4 versus the mid-month read of 61.2, also lower, but it doesn't change the comp back to May. And if we look at expectations, from 51.8 mid-month to 51.7, still the weakest since May as well. And on the inflation front, very similar, but in a positive way. We're expecting 4.8 on the one-year inflation. 4.8 was last look. The mid-month, it comes in 4.7. And the 5 to 10-year inflation, instead of 3.9 mid-month, it moves to 3.7. 3.7 would be comping to 3.5 in February. So the growth with respect to what's associated with when you look at Michigan sentiment, well, much of it's supposed to reflect the equity market. It's downgraded just a bit from the last 2 weeks. But if you look at the inflation indicators, they also moderated a bit. The market hasn't moved a lot on them, kind of a wash. And how do we summarize? Well, right now, 418 on a 10-year is up about a basis point on the session, but it settled at 413 last week, so it's down 5. And if you look at a 2-year, it settled at 257 last week. It's down almost 10 basis points on the week. It is virtually unchanged on the day. We did have good income and spending, and the PCE numbers rather sticky. Sarah, back to you.
All right, not too bad. Not too bad. Market not that affected by it, up or down, but it came in. BM&R taking a hit right here, down 2%. It did come in the way I think most people expected it to come in, which is why we're not seeing too much of a move. Bitmine is down 2%. And then what do we have on CleanSpark? That's 9. Wow, CleanSpark taking a hit. Hold on, are all the data center plays taking a hit? CleanSpark down 10. Bitfarms down 4. That's probably because of Iren. Iren down 11. Yeah, Iren probably. Dude, if Iren gets downgraded, I think all the other names were following Iren's trajectory. And so it's probably the leader in the market, creating some pain. What about Cypher, which got a Google investment this week? That's down 4%. And then Wolf, which got a Google investment last month, that's down 3%. All right. So that is across the board going down. CleanSpark got a downgrade as well, downgraded from 14 from 15. Galaxy down 7%. Okay, so all of these Bitcoin exchanges, miners that are transitioning, taking a hit today. All right, not too crazy. Can you link the Substack? Okay, let me go to the Substack. I don't even know how to link it. Wait, I think this is it. Is this it? Let me put it right here. Again, the Substack will be completely free, but for me, it's just a way to share more of my stuff and force myself to do more deep dives. Okay, so I think this is the link. Dude, I don't use something. I think this is the link. Let me know. Does this let you follow or does this let you subscribe? Because they have this like pseudo Twitter feed. But the goal is to subscribe, not follow. Doesn't work. Nope. Okay, I don't know how to share this shit. How do I just okay, I'll figure it out later and I'll share the link. Or I'll share the link closer to when the deep dives come out. Link doesn't work. Okay, that's weird. I'll figure it out. And then I'll share it next week when we actually do it. All I did was create the profile, but I don't think I probably have to just set up some more stuff here. The link just charged my card $2,000. What if big tech companies outsource their data centers because they don't have enough power? Well, I think we're already seeing that, right? Like Nebius getting that $20 billion from Microsoft, literally because Microsoft does not have the capacity. I mean, I feel like that's going to continue happening more and more. Link works on desktop. I got a follow button. Looks like a Twitter profile. Yeah, I want to have it lead to the subs. Dude, like this whole Twitter clone is, no one is using this shit, bro. I hate when these companies try to recreate social networks in their products. It's like, dude, no one, like the utility of Substack is not to scroll a feed. It's to read long form, content. So I'll figure it out over the weekend and I'll send it on Monday. But yes, it will be free. It will be completely free. It will never be paid. I'm not doing it for money. I really am doing it to train myself to learn how to analyze companies better. And I think, committing 14 days to one company, their financials, their growth, their story, the CEO, management, I mean, it should make me a better stock picker long term. And I kind of like the challenge of it. So yeah, that is why we are doing it. SoFi right here down about 1%, Google up 0.34, Apple down 0.5%, PayPal up a little bit, Amazon flat. It's a flat market, bro. Grabby grab getting hit 2.8. I mean, you're not seeing that much moves. Tesla 424. That is also right. Quantum taking a hit. All right. Same thing with Oklo and BMNR. Is that a 47 yet? 48.20. It's down 2.6. Is there a reason we're red? Let me see if there's any headlines. Again, it's some parts of the market that are red. S&P is still up 0.5%, so it's not really across the board. But I think it's Friday. I think out September for Friday. Weekend laziness. Yeah. There's no major headlines, dude. Gold's up a little bit. I mean, there's nothing that crazy. Gold almost at 3,800. Silver 45.60. I think that's an all-time high on silver, if I'm not wrong. Should be an all-time high. So you got that moving well. Let's check the stock draft, see how we're doing there. What do we got? Let's pull this up. We are still in first place. Matt's at 24. I'm at 28.8. Tanner is at 18. Steve's at 3. Chris is at 7. Okay, so we've been in first place pretty much all week. I think the reason is because Bros took a bit of a hit and Duolingo got a little bit of momentum. I mean, we were down like 45% on Duolingo. Now we're down 33. And then Dutch Bros, I think Matt was down 10. Now he's down 25. So those two are kind of changing the dynamics of it. But we are still holding first. Bitmine, 48.30. 48.30. Yeah, the government shutdown. I mean, let's see if we can get some coverage on that. That is, I just don't know what's going to happen there. Like 12 a.m. tonight, you might get a deal where there's no government shutdown. Maybe you don't. Maybe there is. Like, the White House has threatened mass firings. Yeah, I see some headlines right here. No sign of progress on government shutdown. And it's by next week. You're going to see it get shut down or not, like early next week. But you would think the market would react even more harshly to that. We're flat for the week. S&P now down about 0.2 or up 0.2. It's not like the market cares that much. This is not an all-time high for silver. Okay, what is silver's all-time high? Let's ask Google. Silver's all-time high price, 49 in 1980. Well, it's pretty damn close at 46. 49 in 1980. I mean, dude, commodities don't have the type of year they've had. Gold and silver and copper. Just an incredible year if you've been in that. Meta breaking its lowest since early September. Meta 743. That's correct. Again, the glasses demo was that this week? Did we stream that this week? Yeah, we streamed that, or was that last week? No, I think it was this week. I think it was like Monday this week. It just wasn't, it wasn't legit. But I think the stock is down more on macro stuff than just the glasses. $49 in 1980 is worth like $4,900 today. Dude, inflation is wild, bro. Inflation is freaking wild. What else? It's relatively flat, guys. You're not getting too much. S&P for the week. How much is the S&P down for the week? Yeah, dude. I mean, it's down 0.34%. Like, this is just, it's one of those things, bro, where we cannot be complaining or having any level of emotion. This is nothing, bro. 0.35% up or down is just not much. So if that's the move for this is, again, the worst week of the year. The last week of September. If this is what we have to go through, hopefully this is the extent of it towards the end of the month. I think most of us would take that. Most of us would take that. What is ETH waiting for in terms of a move upward? ETH it's different. It's not like Bitcoin to me, where the supply is so fixed and you get all this hype and momentum and then it just surges up and you have these massive candles. I think Ethereum has always been one of those things that takes time. It takes more utility, more usage. And I think what Tom Lee's betting on is that in the next 5 years, it is going to be obvious what is happening underneath tokenization stablecoins via Ethereum. But I don't think it's going to happen all at once, which is why, again, I'll say this over and over again, but BMNR is not some get-rich-quick scheme where it just goes to 100 overnight. Like, I'm bullish on it, but I also think the covered call premiums are great, and I think you might not get burned as easily because at the end of the day, it trades at an MNAV to its ETH. And until ETH moves, BMNR is not moving as aggressively. And if it does move as aggressively, it's likely overvalued, and then it comes back to normal, which is what we're seeing here. So if ETH rips, can it rip? Yes, 100%. But if ETH takes more time and overall utility for the value of the asset to be appreciated, then BMNR is going to be a slow grind upward, which is okay. It's a way better risk reward than a lot of other names in the market just based on its pure potential. But it might not be $100 tomorrow. Tom Lee said ETH will be doubled by year end. So I love Tom Lee, but I don't know if I agree with these, dude. I mean, he also said Bitcoin 200 by end of year. I think he's just really aggressive. I don't know if we easily get to that point. Even with the rate cuts, dude, to have that much money flow into Bitcoin and Ethereum. I don't know. I don't know if that's that easily possible. But I do think they are higher than where they are today. How do you think PBDT will affect the market's pattern day trader rules? I don't think it's going to have that big of an impact. So again, what they're talking about right there is the right now in the United States, you have to have $25,000 or more in your brokerage account to be able to day trade. And if you have less than 25,000, you can't make multiple trades a week intraday, aka day trading. But the SEC or the FINRA is getting rid of that rule. As long as the SEC approves it, it'll officially be the law of the land. I don't think it matters that much. I mean, you might have some kids blow up their accounts. You might look, if you're trading with 25,000, you're not having that big of an impact on the market in the first place. So I never thought the rule made that much sense. I'm like if you're day trading, you probably have more than 25,000 in your account. You kind of have to, right? Like you can't really day trade that effectively with 25 grand. You need to have hundreds of thousands. Because you're looking for a small move, and that small move on a lot of shares makes you a profit. But if you only have 25 grand, so I don't think it's going to have that much of an impact, but it will lead to probably more trading volumes, which is good for the brokerages. Yeah, as Doug says, you're asking how much people who have less than 25K in their accounts are going to impact the market. It's not that serious for those traders. 25K in equity or cash. I believe it's a mixture of both. It might be cash, but you need to have 25,000 in your account at minimum to be able to day trade. When did you start accumulating grab like day and year? I started November 2024, but realistically, that was like a couple hundred shares here and there. Realistically, January of 25, 470 was the main price I started going heavier for. And I have no problem buying at these levels. I want to see if we can get below 6. That's where I would really like buying more. But I think it's consolidating nicely in the sixes, which is not too bad. Okay, let's see what else do we have here. We don't have. We heard the Ken Griffin comments yesterday. I showed you guys that of Ken Griffin talking about. I see echoes of the .com bubble, and the quote was not as serious as some people think it was. I mean, it was more so just a question of, hey, there are certain parts of the market that are frothy, and we want to make sure that the overall market doesn't get frothy, which is why he says this feels like a little bit of a .com bubble. But overall, Ken Griffin's still pretty optimistic on the state of AI. Meta came out with a new feed in the Meta app for short form AI generated videos. I don't know who the hell is going to be scrolling through their Meta AI app to watch AI videos, but apparently this is an initiative that they're working on. I think a lot of the recent AI innovations by Meta have been a dud. Like Llama, a dud. No one uses Meta AI. If they do, it's by accident. I don't really think people are going to scroll through and watch these videos at all, to be honest. I mean, you'll have some people do it because they have billions of users, but is it meaningful? I don't think so. And then this Gemini headline yesterday about them needing Google for ad targeting, to me was just quite incredible. Not bearish Meta at all, but you can definitely tell why Zucks is spending so much money on AI researchers. They haven't had a hit AI product. Google has Gemini, OpenAI has ChatGPT, Claude has Anthropic. Apple really doesn't need one until the models get so good that they can just turn it into Siri, and they already have a Gemini partnership right there that could be helping them. Amazon and Microsoft, obviously, the cloud is doing well for them. So, what does Meta really have outside of AI advertising? And the glasses, to me, again, there's going to be some AI powering the glasses, but the glasses are still a dud. Those are not the next multi-billion consumer product, at least not yet. And the demos they showed off didn't really show that it was likely to be the product. So, I don't know. Again, it's not bearish Meta because their numbers are just too good, but it's what is their big AI hit? I don't think we fully know yet. Next decade, there you go. That one's moving up 7%. Shout out to Matt Money. He's been heavily buying the dip on this one. Insiders have been buying the dip. Again, this one, quite literally, Matt has said you have to hold for a decade, but you are getting a 7% move right there. Yeah, and XAI is Grok, correct. Which Grok probably has less users than Meta AI, but Grok has, I think, way more usage than Meta AI. A lot of people use Meta AI every day because of Instagram, but I mean, I've never opened up Meta AI and asked it questions, but Grok every day. And I think that level of usage is very, very important to make sure that it actually ends up becoming a real product. Amit, I sold BMNR 55 put 2 weeks ago, expiring today. I'm deep in the money. What should I do? You should be rolling those puts. So this is a good, this is a scenario that happens. You shouldn't feel too bad about it. You probably sold these puts when they were at 60. So you assumed BMNR would stay at 60. Unfortunately, stock went against you. Stock's at 48. You're at 55. It is what it is, right? Life happens. It's not something to beat yourself up over. It's a question of how you manage the situation. So in this case, if you do not want to buy those shares at 55, which I would imagine you don't want to, even if your break even might be closer to 51 based on the premiums you got, you would have to roll those puts. So you would have to close the current puts you have, buy them back, and sell to open new puts. And likely, if you're confident BMNR gets back above 55, you can keep the same strike and roll probably a month out and give BMNR another month to get above 55. So your 11,000 of money is stuck in collateral for the next month, next 2 weeks, but you're optimizing the ability for you to not have to be assigned on those puts at 55. And if you're on Robinhood, it's pretty easy to roll. If you're on another platform, you just buy the contract back, sell the new one. But I don't think you're that bad of a city. If you had BMNR 65 puts, for example, then it would be a little, but you're at 55. I mean, I could see it getting back to 55 pretty easily. So I think you roll those and you're not in a horrible spot. Yes, this is the options video for anyone that wants to click and learn. I know everyone wants options 301. Dude, it's just every weekend it becomes so hard to actually sit down and record it with Jason. But it is on the docket. I know we do have to do it. I'll ask him today if we can get it in, because it's not, again, it's not just been me. He's been busy as well. He's totally revamping his business, and they've been doing a lot more content. You guys know he's constructing a whole new headquarters, like, physically constructing it. So the only day he's free during the week is Tuesday. That's why we have Technical Tuesday. Otherwise, he's busy. So I'm going to try to see if I can schedule it with him. He also has a kid, so on the weekends he's busy. But we're going to try to see if we can get that done. Grab right there. That's down about 2%. Then Google, 246. All right, let's get a little bit of coverage on consumer sentiment as well and some of the PCE data, and then we'll keep going from there.
Exception, consumers with large stock holdings. Stock market obviously did very well in September, and so those consumers actually didn't feel as pessimistic, but everybody else did. Look, Rick just mentioned the PCE. This is the Fed's preferred measure of inflation, and the good news here is that there were no major surprises on the inflation front. Up 0.3% on the month in August. And then if you look at core, it was only up 0.2%. So where are we tracking on inflation overall? We're not at target. Remember, the Fed wants to see 2% inflation. We're at 2.7%. Core is 2.9%. That was expected, though. And if you break it down, guys, it's still really a services problem. I mean, that is where the bulk of the inflation is coming from in this report. Take a look. I mean, yes, gasoline and energy had a stronger month, but transportation services, it's a really big expenditure. It continues to be high prices. There's some goods in there, motor vehicles and parts, but financial services and insurance, food and beverage services, higher. Overall goods was a little bit elevated on the month, 0.9%, but services is still the problem. And so we'll continue to have this debate, David, about whether the Fed should respond to this because it is services inflation, it's not just tariffs, or whether we are facing higher inflation rates because of tariffs.
Right. And then there is tariffs, obviously, and the continued debate about whether and if there will be an impact on prices that at this point, I mean, you obviously, and I know you're going to share some of the sound with you and Ken Griffin yesterday, but you did go back and forth on that. He definitely was in the camp that says it's coming.
It's coming. Yes. Yeah. No, I sort of was wondering if he had warmed to inflation or to tariffs at all, because he's been critical in the past.
Yes.
It doesn't sound like it. Listen.
The belief is that the inflationary impulse from tariffs has only passed about 50% through to the economy at this point in time.
So you see it coming?
Oh,
tariff
it's still
inflation.
coming. It's still coming.
And I sort of challenged, what the administration says the exporters are going to pay, and that, the companies will eat it. And he sort of laughed at me like, that doesn't actually happen. It's a tax, and consumers ultimately are going to pay it.
So far, that's what's been happening. I mean, you have Ken Griffin saying, hey, like, the tariff impact is inevitable. It will hurt the economy. It will hurt consumer demand. So far, we're not seeing that in any of the data. Now, maybe that does end up happening, but the middlemans, the intermediaries have ate the tariffs so far enough for it to not be reflected in the data for consumers.
Yes.
And if you look at prices of key goods, for instance, like a video game console, like you've seen prices elevated. We're just not seeing it spread as broadly, affecting, a PCE. We haven't gotten to 3% yet. And so that's why the Fed's kind of like, well, we'll worry about jobs more.
Right. No, he termed it as a consumption tax, and even made the point as well, if I recall, that it obviously hits harder at the lower income segment.
Yes, exactly. That's been his problem with it.
Yeah. One
people told us coming into this period that seasonals were going to work against the market. So I don't really think that anything that we've seen this week changes the story for me. The economic data has been pretty strong of late. Corporate earnings have been pretty good of late. And for me, that's the overriding theme. Certainly more important than any intra-week trading.
Right. Last night's introduction of some renewed tariff uncertainty, possible shutdown next week. Not to say it's the end of the world, but it's rarely convenient.
I mean, listen, the four of us have been doing this for some time. I refuse to play the shutdown game. It doesn't matter at all for markets. It barely matters.
If we don't get a job.
S&P about to go red. All right, so 10:30 slam. It's almost 10:30. You're starting to see some red candles across the board. S&P basically 0.02% away from going red.
Number or CPI?
No.
If data collection in October stops?
I will not do it, sir.
Oh, wow.
It doesn't matter. It mattered the first time. It has not mattered since. I mean, the first time back in the Obama era. How many times have we've been told the shutdown's coming? Everyone gets paid retroactively. Yes, you probably can't go to a park for a minute, and it's terrible if you're vacationing. But for the broader market, obviously, if you rely on government expenditures, maybe there's an interruption. But for the broader market, it doesn't matter.
And how about the tariffs?
Well, those certainly matter. We got new data today. Goods within the report that are more likely to be tariffed are going up more than elsewise. But to Sarah's point earlier, we've done really well here. There were a bunch of us that were telling people if tariffs go up by 25%, that doesn't mean consumer prices go up by 25%. There will be some burden sharing between exporters, importers, and consumer, and that's what's happening. And when even the Fed chair is telling you tariffs, inflation has not gone up as much as we thought. For lack of a better word, from the market standpoint, that's a success.
Although the chair also said that it's probably why some companies are not hiring.
Yeah, no, there's a lot of cross.
It's not all just about the price increase.
Listen, for me, as I hit my mic, I apologize. I think the market is too sanguine about the forward. To echo Ken's point, the market is too sanguine about the next 9 months. I'm a little more nervous than the average investor. But listen, again, the tailwinds here are pretty strong. The economy is doing pretty well. Corporate earnings are doing pretty well. Costco yesterday told me inflation wasn't a problem. The Fed chair is cutting rates, probably another couple. That all else equal is probably a positive.
I think the biggest positive actually of the morning, the one surprising data point was the personal spending number.
Yeah.
Up 0.6%. With the strength in the consumer spending, despite elevated inflation, despite tariffs, despite all these sentiment indicators, is holding up very well.
We were internally at Solus yesterday, we were talking about Vegas and the casinos and how there's this narrative going on online that Vegas has gotten too expensive for the average person, et cetera, et cetera. To your point, Sarah, the entire economy has been luxurified. Everywhere you turn, everything is better than it used to be, fancy or more expensive. And the U.S. consumer has powered through it quarter after quarter after quarter. We keep getting told by people, oh, this is going to break the consumer. And every time Visa and MasterCard report, yes, sentiment is not great, but consumer spending, despite all those changes, is doing very well.
Trips to Vegas are down like 6 months in a row, year on year. Hotel occupancy rates are down a full point year on year
to 96.
So I mean, it's true. If you own stocks, you feel great.
Yes.
If you don't, you're part of CarMax's quarter, right?
Well, to some degree, that's fair. Certainly, if you own stocks and stocks are at a high. However, I keep hearing from everything from Dollar Tree on up to higher priced retailers. Look at O'Reilly and AutoZone. There are huge parts of the economy that are doing fine in this past earnings season. For companies that I'm blanking, maybe it was Signet or a couple of other companies that recently reported. We passed through price increases, and none of our income cohorts responded in a negative fashion. And that more or less that sentiment has been echoed across the board. Now, mind you, again, to the larger point, tech is doing a lot of heavy lifting here in the broader market. There's no doubt about it, obviously. And how many times have we talked about whether this is a bubble or not, akin to the 90s? And I don't think many viewers may know, despite our youthful appearance, all four of us were there.
Not you, come on.
I came later than the two of you, and Sarah later than all of us.
We haven't talked nearly enough. We're going to keep talking so much more about it being a bubble. Dan, we've just gotten started. Are you kidding me?
I'm glad we're talking about it very quickly here, because you would know as well as anybody. We were talking about the tech bubble in 1997, 1998, and it went on and on and on.
It did.
And it wasn't until the back half of the 90s, till MCI WorldCom and Sprint broke down, which you're surely familiar with, viewers probably not.
Yes.
I don't think we're anywhere near that. And so you have these strong tailwinds for the broader market.
And I think that's fair, right? If we're not near kind of the end of it, given how much build out we are still seeing all in front of us, then the conversation around the bubble is healthy because it means there's skepticism, there's a wall of worry, but it doesn't mean that it's playing out. We are getting our 1030 slam right here. There you go. S&P very close to going red. Nvidia, Tesla, Palantir, Hood, SoFi, AMD, Grabby Grab, Reddit, Meta, ELF, Apple, SMCI, all of them getting a bit red on the day. Was Vegas dead when you went there? Yes. Vegas was, Vegas was not Vegas. It was not real. Like the only people that were there were the people for the Robinhood Summit. Otherwise, it was not a thing. So I don't know if that's a Vegas problem or if that's a consumer problem. I'm probably sure it's a combination of both. But yeah, there was no one there. I mean, you go through the casinos, there's like barely anyone at the slot machines. Like, it did not feel like the most exciting time to be in Vegas. Now, maybe some of the Vegas natives will tell you that September in general is always a little flat. But I don't think it's indicative of the broader economy, but I definitely do think, hey, like we didn't have a ton of people there. Yeah, there was a Canada. One of our Uber drivers told us about Canada and Vegas. What exactly is the reason? The stat is that Canadians have 42% of fewer Canadians have traveled to the city so far in 2025. It's because of some law, right? Or something. The number of Air Canada passengers dropped by 33% in June compared to the same month last year in terms of Vegas. I feel like there was something that happened between the United States and Canada that created the inability. Maybe it was just the general tariff like war between them, and that caused the bad sentiment to go to Vegas because of Trump. Okay, yeah, that's what I remember. Chris and I were in the car at the same time when the Uber driver was telling us that Canadians aren't coming to Vegas anymore. And I was like, Canadians? I didn't even know Canadians were that big of a part of like Vegas culture, but I guess it is. The 51st state BS. All right, well, our friends up north are not gambling in Vegas. And there's like real stats on this, dude. Real stats on how much Canadian tourism is off in Vegas. And there probably could have been a reason. Let's do this question. This will be a spicy one. It'll be a fun one. Okay, so let's do this right here. All right. I'll do a poll in the chat. Simple question. If you are from Canada, do you like Trump? Just a yes or no. Like, interpret like however you want to interpret it. But do you like Trump? We did threaten to invade them. That is true. We did threaten to invade Canada, which was not the best. But when I went to Toronto, I think I met a decent chunk of people that, from an investor perspective, they don't really care about the politics. They just care that Trump's making the markets go up and they're happy about that. But then I met some other people, and some people hated Donnie T. I mean, when I mean hated, I mean they cannot stand this man. They hated Elon too, because Elon has said some shit about Canada that's not been the best. So there definitely was a little bit more hate than love for those two. And, you know, not everyone's an investor as well. So if you're not an investor, you don't have that angle to be excited about Trump, then, you know, that could hurt you. That's about 50-50. 52% say no, 48% say yes. 50-50. How's Win performing year to date? That's a good question. Win year to date, that's up 53. Caesars is the one that was getting hit the most. I think it's because Win has a lot more business outside of just Vegas, whereas Caesars is a bit different. Yeah, Caesars down about 20% year to date, and Caesars got kicked out of the S&P, so they got hit. Okay, so now we'll do. Okay, so we'll keep the spice going. We'll do a more general one. Wherever you are across the world, let's see. Do you like? I've never actually done this poll. Do you like Trump? There you go. Whoever you are. Again, I don't care about politics, bro. I really don't. I don't give a shit. I don't care if you're left, right, up, down, straight, gay. I really don't care about your political beliefs. And this show has zero intention to influence or impose my political beliefs. Because quite frankly, I don't have that many. I care about the stock market and politics. I care about affecting the stock market. I don't care about getting people. Like whenever I see some politically charged headline, I don't even think of tweeting about it and adding my opinion because I don't care about people thinking, oh, Amit thinks this way about this political subject. Like that's not why people follow me. That's also not the brand I'm trying to build. But I am curious. What do we have in the chat? 60-40. 60-40. 60-40, yes. 40% no, 60% yes. So you only care about money? Yeah, kind of. Some people get offended by that. Some people recognize that the reality of life is that your economic well-being allows you to take care of your family, your loved ones, your future loved ones, and move forward. So yeah, I mean I really, and not from a, like a cheap sense. Like I'm not cheap or anything. Like, oh, I only care about money. Like, no, it's like I care about my economic mobility in life. And I think everyone should. Like that is where you make progress and that's how you do stuff. And like, you need to have power, influence, and money. And if you can't get power and influence, then you have to figure out how to get the money. And the money is not easy to get. Money's hard. But that's the shit I care about. I really don't care about a lot of the other stuff. Money in a way is freedom. Correct. It's freedom. I really don't feel like scared to say that, or I feel like, oh, I'm like, Amit doesn't care about all these other issues. It's like, yeah, I don't, bro. Like there's a lot of stuff I just don't care about. I care about how can I move forward in my life. And in order to move forward in my life, I need to increase my economic mobility. And most people don't understand, like that is, you're not moving that much forward in life unless you fix that part. You got to fix the money part. You got to have enough money where you're not afraid to take risks and do stuff and try things and fail. But you need to have that economic security. That comes from having one would argue, an obsession over how to become financially free. And for me, the stock market has kind of been the choice. A lot of people have real estate, people have a lot of other things, but that's what I get obsessed with. You're a prime example of why people don't have kids anymore. Yeah, but I want to have kids. Like, what are we talking about? You see, these black or white statements are just too aggressive. Of course, I want to have 3 kids. I want to have 2 girls and a boy. Like, I want to have kids, but you need money to have kids. Like, the irony in that comment is you can't afford kids unless you have money. Just straight up. So it's like, what are you talking about? You're the reason people don't have kids. Like, no, caring about, I'm actually the reason I probably will have kids in my generation, because I'll hopefully have enough money to support them and make sure that they actually have a good life versus struggling constantly, you know? Now, are there some policies that don't affect me in this certain state of being at 28 years old? Of course, right? There's some things I don't care about because maybe I don't have kids and I don't really think that much about. But but I don't need to, like, if you are in a certain position in life where something doesn't affect you to the extent that it affects a lot of other people, is it the worst thing in the world for you to not care that much about that thing? I don't think so. Especially if you're more focused on something else to get to the point in life where you have to be selfish to become selfless. That doesn't mean you absolutely are oblivious to what's going on in the world, but it also means you probably don't have the power to change anything if you're one person, and you likely need to get some level of, again, money, influence, or power to even have your economic, your political opinion to have any economic value. A lot of people want to have opinions and just tweet into the void about what they think about the world, but they have nothing to back up their opinion to actually turn that opinion into some form of movement, reality, etc. You need money, influence, or power. It's really hard to get influence or power. So then the next easiest thing out of those 3 are money. And that's already hard enough to get. But you got to work for it. You got to fucking work for it. Yeah, some people will disagree, but it is what it is. It is what it is. I wish more people said, I don't care. Yes. I wish more people were just honest, bro. Wish more people said they just don't care. Dude, there's some things I don't care about. There's a bunch of political things I don't care about. But, you know, it's okay to admit to yourself that you don't care about it. Tesla Groupie says kids are expensive. You need money for kids. That is 100%. Also, when you came from a family that I came from, where, dude, we lived in an apartment for 15 years. My mom worked at Walgreens. My dad owned a liquor store. I barely saw him when I was a kid. He worked freaking 15 hours a day. Like, when you come from a family that really doesn't have money, that just was literally paycheck to paycheck to survive, like, it's not like, hey, dad, I want this toy, and you get this toy. It's like, no, bro, like, your dad tells you, like, no, we can't get that right now. We're not in the position to afford it. Like, when you come from people that just don't have the money. And again, my parents worked very hard, and over the past 10 years, they've really, manifested the American dream. But the first 15 years, coming from India, my parents lived in Russia. My parents went from India because my dad could only get a job in Russia. So they lived for 2 years in Russia after my sister was born, and then they came to America. I almost was Russian, bro. I was almost Russian. They lived there from 94 to 96. I was born in 97. I was almost Russian. Which would have been crazy, bro. But not like, when you come from that perspective, and now you can afford to, give your mom some money to go pay for some things that she needs. Like, that changes things. But you have to have the money to be able,
To buy your dad a Tesla, you need to be able to make enough money to afford the monthly payment on the Tesla. It's like to give back to your parents that gave up everything. You have to get the money, which means you got to care about it. And I think caring a lot about the political shit is a distraction. It becomes a distraction because you can't have any impact on it, but you can have an impact on your economic mobility. You can have a real impact. Okay, rant over. How long was that? That was 5 minutes? That was that got me going, bro. That got me going. I don't even think that rant was that political. I think it was just like facts. Like either you care about certain stuff or you don't. But those are my thoughts on it. Imagine trading a Shirley Temple with vodka neat. Yeah, if I was Russian, oh my goodness, I'd be doing vodka instead of Shirley Temples. That's for sure. That is for sure. Could you imagine Amit speaking Russian? I wonder if my dad knows a little bit of Russian, dude. Like, I think I found out when I was like 10 years old that my parents lived in Russia. It's like, what? And I saw these pictures of my dad in the cold in Russia. It's like, damn, bro. They just made it to America, bro. Like, they just made it. Otherwise, it would have been a totally different life. My sister was born a year before they went to Russia. She looked like a little Russian doll in all these pictures when she was like a year old, but she was born in India. So she didn't end up going to Russia. Okay, Google 247, Grab making a little move to 610. There's just not that many headlines. The 1030 slam, by the way, that is a conspiracy. It's not like a real thing, but Jane Street Citadel, there was some data that came out at the end of 2023 that showed that every day at 1030, the market makers prop up a lot of stocks or, artificially, or prop them down artificially in order to manipulate the way people trade options. And so that's why the 1030 slam is dubbed the way it is. It's not like scientifically proven, but there's an argument that at 1030 those guys work together to definitely do some stuff in the markets. And by the way, I told you guys the story a while ago, but when I was at the Robinhood event for the earnings, I think it was 2 months ago, I was speaking to one of the analysts, and one of the analysts flat out told me, I cannot make this up. He told me, I got calls from hedge funds when the stock was at, I think, $8 to downgrade it to like $4 or $5 because they were short and they wanted my research, which had heavy influence in the Robinhood community, to make an impact. And he said, I didn't listen to them. I stayed the course because obviously I believed in Robinhood and that worked out very well for him from $8 to $100. But like these phone calls from hedge funds and money managers to the analysts, they happen every day. And when you see an analyst downgrade or upgrade, you definitely have to take it with a grain of salt and see if there's any truth to it. That's why you have to be very selective with the analysts you listen to as well. But the idea that these guys don't all work together and this guy's doing this and this firm knows that this firm told the other guy to do this, absolutely that happens all the time, which is why it's really hard to beat the algos. But it also means you can't get too excited when things go up. And you can't get too fearful when things go down because a lot of times it ends up being controlled by the algos. So it definitely is a different way that these markets operate potentially here at 1030. I don't think it's a conspiracy. I've been seeing that from 10 to 1030, every price action nearly every day for months now. Yeah, I mean, it's a theoretical conspiracy, but obviously it feels very real. Sydney Sweetie new brand deal with Hey Dude owned by Crocs. Really? Is Crocs up? Crocs up 1.5. Dude, is Sydney Sweeney just going to all the freaking brands that people don't care about and reviving them? Yeah, Hey Dude, Sydney Sweeney latest fashion campaign. Okay, let me pull this up. Hey Dude is a clothing brand. I don't even really know what Hey Dude is. Hey Dude is lightweight and comfortable sneakers. It's all. Yeah, there's Sydney Sweeney right there. Dude, it looks like American Eagle didn't get her to be exclusive. Like she did the soap. She did the jeans. Oh my God, bro. She must be making minimum tens of millions on these brand deals. Okay, so Crocs owns Hey Dude. We saw what happened with American Eagle after freaking Sydney Sweeney worked with them. But then again, it's Crocs, bro. Is this worth even taking a flyer at? Crocs stock year to date, it's down 30%. That's probably why they're paying Sydney Sweeney some money. Market cap's $4.2 billion. The Croc executives are definitely imagining that Sydney will pump this thing up. I don't know. I'm not going to take a position here. I feel like we saw what happened with American Eagle. It makes sense, but still, it's not really Crocs. It's a brand that Crocs owns too. If it was a Crocs partnership, I think it would be more exciting. But it's not exactly the home brand for Crocs. Who the hell is Sydney Sweeney? She is a actress and model, if I'm not wrong. She was in Euphoria, which I have not watched, but that's like a big show for a lot of people. I don't know. Well, she's someone help me with this. She's this generation's what? She's the millennial what? Like what actress would you compare to in terms of like the millennial version of it? Doug says, yeah, we saw what American Eagle did. Yeah, I mean, it ended up really making a move. Is she like this generation's like Marilyn Monroe? Okay, that's aggressive. Marilyn Monroe. Megan Fox? Maybe. Margot Robbie, I think is fair. Jennifer Aniston. Yeah, she's like the girl next door. She's like the girl next door. That's what I think of her as. Pam Anderson? Who's that? I'm just kidding. I'm kidding. I already got hit for that a few months ago. I know Baywatch. I know I got hit for that live a couple months ago. So who the hell is Pamela Anderson? I got hit pretty bad for that. Yeah, maybe that's the comp. Maybe. Kim Kardashian. I don't think she's Kim Kardashian. Kim is a little different, I feel like. Kim kind of builds her own brands. Maybe, sells her own stuff. Maybe Sydney ends up going that route, but might be a little different. Enphase right there, down 4. Circle down a little bit. App Lovin' down. Yeah, guys, I don't think we got anything else going on. Nothing too crazy that we see. Oh, I got to show you guys this. We had our boy David Zervos, who was on CNBC the other day. He could be the next Fed chair. I don't think he will, because I think they're going to pick Hassett. But it was funny because the new Jessica Simpson. It was funny because, dude, look at this guy. He showed up in a tux, bro. This guy, I showed you guys the pictures a while ago of this dude in a tux. Could you imagine him as the next Fed chair? He's one of the top 5 candidates that's left. He could be the next Fed chair. Again, I don't think he will, but it would be kind of crazy if he is. Did you buy BM&R dip? I did not buy BM. I haven't bought anything. BM&R, $47.95. Oh, dude, look, I've got a position. I've got 6,000 shares at 46.30. I mean, like, I don't feel really that compelled to buy that much more. If it goes below my average, then maybe, but I'm pretty overweight on the position. So to me, it's just like, it's not that attractive to buy in mass. But I'm also not freaking out about it because, like, I understand, like, it's volatile. It's supposed to be volatile. It is what it is. So I think if you still want to get more allocation, I don't think that, my average is $1 below this price. So I don't think this price is crazy. But I also don't think you have to go too aggressive to the downside if it does take a little bit of a hit. Watch The Girl Next Door. Okay, so I know that's a movie, but I haven't watched it. 1998. Who stars in this film? The Girl Next Door. Dude, it has a 6.5 out of 10 on IMDb. I don't know. There's a 2007 version and 1998 version. Or 2004 version. Okay, I'll put it on the list. You guys know Heat 2 is coming out? Yeah, I don't know any of these people. Paul Dano, Timothy Olyphant, Isha Cuthbert. Yeah, I don't know. Emil Hirsch. I genuinely have no idea who those people are. But I'll put it on the list. But Steve texted me yesterday, Heat 2 is on the way with Leo DiCaprio, apparently. And I thought it was fake, but it's like a legit thing that's happening. And Steve is really excited about that because Heat is a top 5 movie all time for him. And I love Leo DiCaprio, so that might get me to watch it. You don't know Timothy Olyphant? No. I do not know him. I know Timothy Chalamet, but not Olyphant. I've just not heard that guy. All right, here's some coverage on the shutdown. Let's get a little bit of an update here. Let's see what we've got going on.
The countdown clock, Emily.
Hey, David. Yeah, that countdown clock is going. It will be here before we know it. But look, the shutdown is looking increasingly likely. 4 days can be a long time in D.C., but right now, both sides have just very much dug in. Doesn't appear to be really any serious negotiations going on. That means that we could be headed into the first major full government shutdown since 2013. Here's what to expect. First of all, if it begins on Wednesday, goes till Friday, don't expect any jobs data to come out on Friday. You can also begin to expect delays for company certifications, slowing down the process for companies to go public. And this is a big one here, the whole no pay for federal workers and contractors. You know, the last shutdown we had, it was a partial one. It began in 2018. It delayed $18 billion for compensation, purchasing of goods and services, those salaries included in there. And that was an impact found by the Congressional Budget Office. And plus, since U.S. national parks and monuments are also going to be shut, the U.S. Travel Association warning that the travel industry, airlines and rail could lose $1 billion for each week that the government shut down. Now, that's what's happened previously, but this time there is a new wrinkle. The White House threatening massive government layoffs that could impact hundreds of thousands of employees. Now, it's not clear at this point exactly how many agencies would be impacted. The guidance that was given to them is basically to not reduce workforce for programs that are in line with Trump's priorities, but it raises the stakes for what a shutdown could mean for industries and for the economies. Guys? Okay, Emily, thank you very much. Joining us now to talk about the impact of a shutdown, Mark Zandi, Moody's Analytics chief economist. For all these reasons, Mark, you know, are investors right to brush off the threat of a shutdown and what that might do economically?
Remember, Moody's downgraded the U.S.'s credit rating a couple months ago, and it took us down for like a little bit, but they probably aren't happy about a shutdown or the deficit that the government is ramping up.
Well, sir, I mean, if the shutdown is a week or two, and that's probably the most likely scenario, and that's probably what investors think is going to happen appropriately. So then, you know, from a macroeconomic perspective, a market perspective, no big deal. I mean, obviously, it's a big deal for the government employees that are furloughed or fired, but from a broader economic perspective, not so much.
What about this idea of a data blackout and how that would leave a Fed that is very much data dependent in the dark?
Yeah, well, it's not great. And this is a particularly bad time because we're at an inflection point in the labor market. The job market hasn't created any jobs over the past few months. We lost jobs back in June, and that's before revision. So, you know, pretty inopportune time. And of course, the Fed's got to make a decision about interest rates at the end of October again. So not great. But, you know, again, if it's a week, you know, 2 weeks, any longer than that, then it becomes a real problem. And then I think investors will take notice.
What is your expectation about what the next jobs report will show after we've seen the signs of weakness that the Fed responded to?
Yeah, I expect kind of a flat labor market, no job growth. There's no hiring. Businesses just aren't hiring. They pull back on hours. They cut back on temp jobs. You know, fortunately, they're not laying off. Unemployment insurance claims remain very low and not consistent with any pickup in layoffs. And that's really the firewall between, you know, an economy that's what it is today and a recession. So that's fortunate. But I expect that to continue. I don't see businesses changing that anytime soon. So at best, I expect a flat job market. And when we get all the data in, all the revisions come in, you know, I think it'll show that at this point in time, we've been losing, a fair amount of jobs.
I believe, Mark, you've been pretty negative on the impact that tariffs would have on the economy. So I guess I'm wondering if you're pleasantly surprised that second quarter GDP growth was 3.8%, that spending in August, personal spending was 0.6%, a lot better than expected, and that inflation hasn't surged past 3%.
Yeah, I mean, the revisions to GDP were good, Sarah. I was surprised by the strength of the consumer. I do think, though, that goes to the balance in the stock market and the wealth effects. I think all of the spending is coming from the well-to-do, high-income, high-net-worth households that are, seeing their stock portfolios are up and they feel a lot better and they're not spending. You can see in the saving rates. The saving rate back in April, when the tariffs really kicked into gear, was almost a percentage point higher than it is today. And so that decline in saving represents, I think, high-income consumers is becoming more aggressive.
This is the point Chris was making yesterday as well. By the way, NUAI, the energy stock in the morning, we discussed up 63%. So that one getting a lot of love right here. Most of the consumption is happening by the top 10% in this country. And that is so far not slowing down. It's kind of, you talk about a tinfoil hat theory about why stocks are like kind of have to go up. If stocks go down, if the market crashes, and the only reason that the market is being held up, at least from a consumer's perspective, is because people that have appreciation in their stock market portfolios are able to spend more without worrying too much because, they're looking at their portfolio and Nvidia's up 50%. Like if Nvidia is not up 50%, they're not doing that fancy dinner, right? They're not buying those extra pair of sneakers. And so it's one of those things where, like, if you already have the bottom half of the country that's not able to consume at the levels that they were a couple of years ago, a lot of that, being propped up by government jobs as well. But if that's not the case, then if the stock market collapses, the upper 10% of the country is also not going to spend. And then you get into a real recession, right? Because if there's no consumer expenditures, like the big tech companies, which at the end of the day still get revenue from consumers engaging with their products and services. Like you need people to pay for ChatGPT if you want there to be an ROI on these GPUs. Like that goes to shit. AMD right there down 2%. It kind of makes you wonder, the government, Trump, the feds, they know you kind of have to have the markets grind higher. Not to say there won't be pullbacks, but you can't get a full-on bear market because then Main Street gets hit even worse because then there's no spending. And if there's no spending, that gets pretty aggressive. So we're going to have to see. But that is definitely a good point about the state of the consumer. Savvy, thank you for the super chat. Admit, I have 200 shares sitting in my Roth with an average of 17. Would you say it's a good idea to sell 1,000 shares or 100 shares and buy BM&R? I have more SoFi in my other brokerage with an $11 average. Honestly, no, I wouldn't. If you have SoFi at 17, I personally wouldn't sell that because I think SoFi back to 17 is not going to be easy. And so I think you let those shares ride out for a very long time. Like it's kind of always been my philosophy. It's the same reason, when I saw Jeremy sell his Tesla, I was confused for a couple reasons, but the number one reason was his average cost is $13. So like, it's never going back to 13 again. I mean, maybe, but like it's very unlikely. So it's like you just let that ride out. So if I go back to 17, yeah, it's almost like a 50% correction. But given the tailwinds to the business, I don't see that easily happening. So I think you got locked in at a good price, and now you just let it play out. I don't think the risk reward of buying BM&R at 50 versus selling your SoFi at 27 on a 17 average is that easy to come to. It might outperform, but I still think if you got in cheap, then you got in cheap. I mean, same thing for a lot of people that have $8 averages, $7 averages. Like, why would you sell? SoFi, Hood, Palantir. If you're in under $10 on some of these names, under $15, that's it. You're done. You give Noto 10 years, give Vlad 10 years, give Karp 10 years, and let them execute. I mean, again, you guys know about Louis, who might be watching here. He has 90,000 shares of Nvidia at less than $2, right? Like he just let Jensen do his thing. That doesn't mean every stock's going to give an Nvidia return, but when you're so early, I think you just let it play out. So yeah, I wouldn't get too aggressive on that. JS, thank you for the super chat. Between some trims and calls, got my Nvidia cost basis down to 72. Thanks for taking the time to show us. Cheers. That's awesome. That is awesome. I am in at 122.25 on Nvidia. So not at 72, but that is nice. Let's do this poll. Let's do this poll in the chat. We did this for Hoodie. Let's see what you guys see here. We'll do the exact same numbers because I know this is a heavy Nvidia chat. How many shares of Nvidia do you have? So let's go 0 to 1,000, 1,000 to 5,000, 5,000 plus, or 5,000 to 7,500, and then 10,000 plus. 10,000 plus. I am not 10,000 plus for Nvidia like I was for Robinhood. That is do not have 10,000 shares of Nvidia. I wish I did, but I do not. Palantir right there, 175, and then Hoodie, 1.37. Okay, 90% are 0 to 1,000. That makes sense. And again, same thing with Hood, right? 1,000 shares of Nvidia is freaking 200 grand, basically. 1,000 shares of Hood is 120 grand. So like these stocks, as they continue to gain momentum, you know, you get 300, 400, 500 shares, it becomes a real sizable amount of portfolio. Yeah, I don't have 10,000 shares. I wonder if Tanner has 10,000. I feel like Tanner has like a lot of shit. Bro, he's been in it he's been in through all the stock splits. He's never told me how many he has, but I'm like, I feel like Tanner is sitting on like 50,000 shares, some shit like that. Maybe I'm wrong, but he is definitely early. What do you think about PayPal leaps? I mean, dude, I feel like PayPal, the equity is fine. The leaps should be fine because everyone thinks it's undervalued. But what if it just doesn't? What if it's a value trap for the next couple of years, bro? It's already been a value trap for 2 years. What if it continues to be a value trap? I don't know. I don't know. I don't think it's that easy. Can we do a poll on that? Are we buying PayPal? Are we buying PayPal? Can we do a real... Are we buying PayPal? Simple. Yes or no? They're buying back the company in the next 5 to 7 years. Are we buying back PayPal? Sachin says PayPal, aka PayPal, is good for stock. Well, so if you're selling puts on PayPal, this is one of the best stocks in the market to sell puts on, because if you get assigned, so what? Like what is, like, I mean, yeah, obviously there's risk, but like, do we really see PayPal going back to 40 or 50? I mean, it could, but their growth is strong enough to keep this thing at around 60-ish, I would say. The premiums aren't amazing, but if you get assigned, it's like, all right, I have some PayPal. It should be de-risked enough to not feel like it's horrible. And then if you have some calls on it and it gets sold at like 70, it's like, okay, cool. Maybe you didn't want to have PayPal for the next 2 years, so whatever. You made a little bit of money. But I don't think it's the worst in the world. What do you think of 70 cash put on BMR? I would not do that because stock has to get above 70. The premiums are probably juicy, but you need a big stock move to even get in the money on that. So a covered call, I think, is fine. But yeah, when you do these in the money puts, you have to be really excited that the stock. Like I sold $65 puts on Hood before Q1 earnings, and I made like 15 grand because like Hood went above 65, but then Hood tanked to 29, so I closed them out thankfully the day of earnings. But like if you're not confident that the stock's really going to move, then in the money puts are always a gamble. Tesla right there up about 1% on the day. Yeah, the premiums are not the best on PayPal. That is fair. It's not the best on PayPal. HIMS is running a little bit. Oh, by the way, I do not own this, but there is a new 2X BMNR. BMNU. I would be very careful with this. BMNR super volatile. I would not YOLO into this. I would really think twice before you allocate into something like this. You just don't know what's going to happen with ETH and BMNR, but BMNU is the 2X leveraged BMNR. I'm not in it. I'm not getting in it. I have my BMNR set. Obviously, if you want max leverage exposure, it's a good tool, but it's something to really, really, not ape into, in my opinion, because you just don't know how it plays out. I also think you want to see ETH make a move before you even get excited for it, because you want to know ETH's not getting ready to go to a downtrend back to 3,500. Full port BMNU. I mean, dude, if it works out, it works out, but it might not be the best. Why buy PayPal when there are so many better options? Yeah, I agree. I mean, the reason people would buy PayPal is because of the value, right? The pure value that the opportunity is providing. And you would have to imagine that value gets recognized, but if it doesn't, then it ends up being flat. Now, here's someone who thinks there's a lot of value in the AI ecosystem. I played a couple clips of Jensen talking about AI. This is someone that's even a little bit more excited about AI, founder of SoftBank, Masa-san. And you can hear how excited he is about the growth of this industry.
I think Nvidia is undervalued. On what basis? Because the future is much bigger. Nvidia is just one example. Right. Okay? So I said, okay, let's accept the most negative critics view. That is only 5% change, 95% unchanged. But what is that, ASI investment required to take? Okay, 10,000 smarter than mankind. How many? I have predicted it will take 400 gigawatts of AI data centers power. 400 gigawatts. That's bigger than total US electricity. The cumulative capex, $9 trillion. $9 trillion. How do you recoup? I say it's still very reasonable capex. $9 trillion is not too big, maybe too small. I say, what is $9 trillion cumulative? But if the 5% of GDP in 10 years from today replaced by ASI, what is the number? Right. 5% of global GDP is $9 trillion. $9 trillion per year. If the ASI produce you $9 trillion per year, cumulative investment of $9 trillion, small money. All right. Small money. You recoup in 1 year for the total cumulative. So that means $9 trillion capex investment you can depreciate. 1 year revenue, that means like 50% profit. 50% profit. It is going to be $4 trillion net income per year. $4 trillion net income shared by new GAFA. 4 companies will take $1 trillion profit.
And you want to be one of them.
I hope he's right about that. I hope he is right about that. But as you can see, he is pretty excited. Nike right here, down 2%. Folks, looks like Bill Ackman's not excited about Nike. We got a note by Pershing Square today. While Nike's margins are currently depressed due to intentional actions taken to effectuate the turnaround, we believe the company can return to historical levels of profitability over the next several years. Or actually, maybe they are more excited. What did they say? It looks like they sold some of their Nike, and that's why the stock's down, but they still have a chunk of it. We are confident that Nike's obsessive focus on spot under the best-in-class leadership will reignite brand momentum and enable the company to achieve its decades-long track record of high single-digit revenue growth and low to mid-teen margins. Okay, this is kind of positive. It doesn't look like he sold. Remember, he swapped all of his shares for options a while ago. So if you see that he doesn't have any shares anymore, that's because they have in-the-money calls with a 3-year expiration, and they have like a couple billion worth of it. So they got rid of the shares like almost 7 months ago. But this one doesn't seem like a bearish note on Nike. So maybe that's not the reason why Nike's down, but it is down 1.2. Chamath new SPAC is live. What? We got a new SPAC? Oh my, there you go. It's live. AEXA, American Exceptional Corporation, American Exceptionalism Corporation. It's already up 8%. You got people buying it. AEXA. Let's see the volume on this thing. Again, it has not picked a company yet. American Exceptionalism Acquisition Corp. Dude, volume is 5 million shares. People are already trading it. This is the same SPAC that had the S1 disclosure of quote unquote no crying in the casino. So Chamath's like, hey, if you lose money on this shit, do not blame me. I am not the reason why this one goes down. Now, part of me thinks that, or at least the contrarian in me thinks that this is going to do well because he's had such a bad history with SPACs that maybe he really gets a home run on this one and kind of rebuilds his reputation in the public markets. But also, if we're frothy enough for a Chamath SPAC to be out, it definitely, makes people wonder what exactly is going on. But that is officially live. AEXA is what we've got. All right, we're going to see. Look at ticker symbol F, Ford. Wow, why is Ford up 4% today? Is that just a random Friday thing, or is there news? Ford doesn't move 4% like that. The headline is Ford shares up 4%, the highest since July 2024. Okay, that doesn't tell us why it's up, but why is Ford moving? Volume on Ford, 40 million shares, bro. The average is 59 million. They've done 80% of the volume in 2 hours. Huh. Oh, the tariffs on trucks, right? Is that good for Ford or bad for Ford, though? Trump did announce tariffs on trucks. I think I forgot to mention that in the morning. Trump announced tariffs on trucks. He said, in order to protect our great heavy truck. Oh, yeah, because that means Ford's going to be manufacturing more trucks and people are going to be importing theoretically less trucks into the United States. That is bullish Ford. On October 1st, I will be implementing a 25% tariff on big trucks made in other parts of the world. Therefore, our great large truck company manufacturers will be protected. We need our truckers to be financially healthy and strong for many reasons. All right, there you go. That's your Ford move. Highest since July 2024. This stock is usually stuck between $9 and $10. And it's a big trading stock. I mean, a lot of people trade this thing. But is it still one of the top stocks on Robinhood? Yeah, it is. So these are the top 10 stocks on Robinhood. Apple, Amazon, Microsoft, Tesla, Nvidia, Meta, Palantir, and then GameStop, which I hate that it's there, but GameStop's there. Disney, which is whatever, and then Ford, because Robinhood gave out a lot of Ford shares to people when they joined the platform. Ford unveiled a $30K electric truck. Really? Ford 30K electric truck. Was that today they unveiled that? A 40K. Oh, this was back in August. Yeah, I don't think that's moving it today. But yes, you're right. They did unveil a truck for 30K. Do you remember that other company, guys, Slate EV, that had their like 15 minutes of fame and they were promising like a $20,000 truck for EVs? They had a really big commercial, went super viral. I have not heard anything from this company in a long time. They got a lot of pre-orders. It's really hard to execute and actually deliver profitably vehicles, but haven't heard from them in a while. Slate is, I don't think Amazon owns Slate. Do they? I don't think that's the case. Oh, Amazon invested in their Series A. Okay, so like, yeah, they own a part of it. Yeah, so they invested back in 2022. Well, I didn't know that, actually. If they've got Amazon backing them, that's actually more interesting. Dude, see, this is why we buy Amazon. Amazon's going for everything. They are not, there was a good chart I saw yesterday about Amazon's earnings versus its stock price. And it's another buy signal to me for Amazon. I mean, the earnings were going up and to the right and the stock price was just staying flat. And so I do think that this one should be the next to break out. Chat says I have a reservation. Okay, so we're going to see. Looks like this one might end up playing out. Let me see if I can get the commercial again. Because again, it went super viral. And the whole idea was customization for your cars for a cheap price, which is what a lot of people got excited for. Let's see. Joseph says 400. Yes, Joseph Carlson does say $400. He's been pretty bullish on it for a while. Yeah, this is the commercial. It got 11 million views.
This is a slate. This slate seats 2 and can carry sheets of plywood. This slate seats 5 and can fit tons in the frunk. It's actually the same slate. This is narrated by me, Jeff. I work at Slate and just happen to have a great voice.
He really does.
That's Chris, our CEO. Chris thinks new cars are too expensive and too complicated.
A Slate cost in the mid-20s. Brand new.
One sec, Chris. Actually, under 20 after current incentives. Go ahead, Chris.
We took out everything that wasn't a car.
That means no fancy screen, colored lighting, cooled seats, self-driving, self-parking, automatic cup holders. Yes, that's a thing.
But you can add accessories like
little screen, big screen, SUV kit, fastback kit, open air kit, one speaker, a bunch of speakers, big bumper, spare tire holder, slatelets, fun grills, even funner lights. Colors, any color. Really, wrap it in any color. And Slate Access Points means you can add an accessory now, later, or even make one yourself.
It's like a potato head. Wait, maybe there's a better analogy.
Actually, there is. Slate is the chameleon of trucks and SUVs. Seriously, just add the SUV kit.
There are 3.
A Slate is not like other cars, or trucks, or SUVs. And Slate is not like other car companies. Slate, we built it, you make it.
There you go. I mean, they got a lot of pre-orders. I think they got a couple million pre-orders on this. If people want something that's cheap, electric, and customizable, that is what Slate is promising. Again, that is not the promise of a company like Tesla. It's a totally different ecosystem for how they think of EVs. But that is what at least Slate is promising. Now, their ability to deliver that and execute on is the hard part. But I didn't know Bezos was an investor. Series A. Didn't know Amazon was in this. Amazon has just had, let me ask Gemini, what have been the biggest Amazon acquisitions? I know Ring, Whole Foods. Yeah, Ring, Whole Foods, 13 billion, Metro, MGM, 8 billion, which I don't know, was the MGM thing worth it, bro? Did the MGM thing bring that much content to Prime? Maybe I'm not the best to speak on that, but because I don't watch that many movies, but I know it got them James Bond. But Zappos, 1.2 billion, and then Zoox, 1. Oh, wow, they bought Zoox in 2020. Ring, they bought for $1 billion in 2018. Twitch was a great acquisition. I think super undervalued. They paid for it in 2014. And then Kiva Systems, 775 million. Okay, let's do Microsoft then instead. Microsoft Blizzard, 75 billion. Skype, that was a dud. Skype is done now. No one uses Skype. ZeniMax Media, 8.1. Nuance Communications, this was actually a good one, 19 billion. LinkedIn had to be their best one for 26. LinkedIn had to be their best one. Oh yeah, Nokia. LinkedIn had to be the best one. But Google's got to be the best one, right? Because they got the YouTube alone makes it the best. Cybersecurity firm, DoubleClick, that was a big one for 3.2. Fitbit, that was not bad. It didn't list YouTube right here, but then YouTube, yeah, there you go, 1.65 bit. Waze, 1.1. Wiz, 32 billion, that's still pending. Actually, no, I think it's got to be Meta. They got WhatsApp and Instagram in an acquisition. Oculus, jury's out. We'll see how amazing VR ends up becoming. But WhatsApp and Instagram, I mean, they're both worth way more than YouTube if you combine them. They have to be. Or at least as much. And WhatsApp is barely monetized yet, right? WhatsApp, 19 billion. That was a steal, bro. An absolute steal for WhatsApp, 19 billion. I mean, that is the de facto messaging platform for the planet. And then Instagram, come on, bro. $1 billion for IG? IG has 3 billion users monthly, as per Zucks yesterday. And Instagram, they paid $1 billion for it. Now, granted, YouTube is YouTube. It's hard to deny the power of YouTube. I mean, YouTube's a different animal. YouTube itself is probably $1 trillion company, right? But still, that's what you got for acquisitions. 2 billion bots. There are a lot of bots on IG, bro. A lot of bots. There's a ton of random stuff on IG. But YouTube has bots too. It's just hopefully it's not as aggressive. Google bought DeepMind. Yeah, that's fair. They did buy DeepMind. That one wasn't listed. How much did Google buy DeepMind for? That one was, I think, under $1 billion. 400. Wow, they got it for 600 million, bro. 400 to 650. Dude, DeepMind is the company that came up with the T in GPT, the transformer technology. Now, OpenAI, got the first mover advantage on that, but still, that is pretty incredible. It was pretty incredible. All right, folks, I think that is it for us. We are done on this Friday. Markets relatively flat. S&P literally flat, not doing too much. Macro data this week was good around consumer spending, jobs, PCE, etc. You had a bunch of Trump tariff announcements yesterday, TikTok deal. overall, it looks like we're going to end out basically flat for the week in a lot of names. And I think that's okay. It's not the worst thing in the world. Chad is proud of me because I know what the T stands for in GPT. Chad, I'm not an oblivious idiot when it comes to technology. I know some things. I know the T in GPT stands for transformer. Now, what does the G and the P stand for? That what does GPT say? That I actually don't know. Oh, generative pre-trained. Ah, there you go. See, I won't forget that now. I won't forget that. Generative pre-trained. There you go. But I know the T. I have the T. All right, word of the day. Dude, what is this word, bro? What is this shit? Ombudsman? Ombudsman?
Ombudsman.
Okay, not too bad. A government official who investigates complaints from citizens about other officials or agencies. He filed a grievance with the ombudsman regarding the smell coming from the factory. The ombudsman's office is located near the city center. I feel like I've heard this word before. I don't think many people use it every day. A government official who investigates complaints about citizens about other officials or agencies. You were saying it wrong. How am I saying it wrong? Ombudsman.
Ombudsman.
Okay, he's putting a little too much emphasis on the U inside that, so maybe I am saying it wrong. But ombudsman, that is our word of the day. Another word defeats him. I'm not trolling, bro. I'm really like, you guys can think I'm trolling, but I'm not. Some of these words are complicated. Military uses a lot. Yeah, that makes sense. Mun, not man. This week kicked my ass when it came to the words, bro. Legit kicked my ass every day. I think yesterday was okay, but every other day we got hit. Aleem, thank you for becoming a channel member. Appreciate it. Keyholder, thank you for becoming a channel member. Chris, thank you for becoming a channel member. Sheila, thank you for becoming a channel member. And HypePod Gaming, thank you for becoming a channel member. Gen X Sterling as well. Thank you for the $10 super chat. And yeah, thank you every day for everyone being here. Pranjal, thanks for the $2. 53.5 BMNR calls expiring October 3rd. Help. You don't need any help on those. You're not near 53.5. A lot of times to freak out when it comes to covered calls is when you actually get in the money. You're at 48 right now. Yeah, dude, you've got a decent chunk to go before you get to 53.5, especially because you only have 1 week. If you get to 53 by next week, you roll. If not, then I think you're fine. So I wouldn't stress too much about that. S&P 500 right here, 658.95. Tesla up 1%. Palantir down 1. Hoodie down 1. Nvidia down half. Nvidia down, or SoFi down 1. Google up a little bit. Grab down 2.5. Again, Nvidia down 1. Hood down 0.87. And then Palantir down 1.5. S&P up 0.14. That is flat for the day. All right. I think that's it. Andy, thank you for becoming a channel member as well. Appreciate it. If I don't see you on the market close, have a great weekend on Friday. I am not sure if we are doing Palantir Weekly. I have to check up with Amir and Arnie. I think we might. I'll probably know in a couple hours. I'll let people know. But if we're not, maybe we'll try to do it on Saturday. But we'll have the market close. We'll have Steve join. And we'll end out this week. And we'll be done from there. Amit, give a speech for 101,000. Okay, so we're not doing a speech for 101,000, but yes, thank you to all the new people that have subscribed. We got to 101, and yeah, we just got to keep going. Gotta keep going. Got to keep working and keep up the momentum. So, thank you, everybody. Appreciate it. I'll see you guys in the market close. If I don't see you, I'll catch you on the Sunday Futures Show, 7:45 in a few days, and if not, see you guys in the market close. Bye, everybody. Thank you all. Have a good one.